about 65, 70%. So you could borrow 200,000, which covers the taxes. Send it to Uncle Sam, tax blanket, probably get some credits back, take some of your dividends, put it on the loan, take the rest of the dividends, put it in your pocket, and you own everything that you got now. Because at this point, you should be able to take cash and say, well, I 2 years and buy me a house cash up front. You know, you can mortgage a house and mortgage a house, put 20 grand down because you're getting over 100,000 a month. You can wait 2 months and then put 40 grand down and boom. And then just make high payments on the mortgage for the first 2 years, and all the money you're putting on the mortgage is tax deducted, which puts more money back into your pocket. There's ways to do it if you do it wisely, but if you spend the cash on stuff, you don't have any assets that are profiting to offset the deficit of taxation, which leads you into a spiral. So, you know, Michael says $1 million buy an apartment complex. Yeah, you can buy an apartment complex, or you can finance an apartment complex, because if you finance the apartment complex, yet again, that tax deduction, but you're not going to have $1 million because they're only going to give you half a million if you get it all up front. The most expensive thing I could think of is a hot air balloon ride for $1,000. What? The most expensive thing I can think about is a hot meal at TGI Fridays, and then I'm gonna take my ass back home. I really don't need a million. Oh, look, if you get a foreclosure home, that's even cheaper. You can pick up a foreclosure home on a deed trust for like 150 grand, 75 grand in some states. It's really straight. But check this out real quick, because your dividend capture calendar for December and January, that's what we're going to be dealing with right now. And the end of 2025 is upon us, and the beginning of 2026 is packed with dividend capture opportunities. Now, I told you guys that this week was full of stocks. I didn't tell you all of the stocks that were there because we only had so many that we could get into. We had Johnson and Johnson, Energizer, um, PSEC, Orchid Island, AGNC. We had a lot of them that we could, and they were all like back to back. But I found that because on the 26th PSEC sell, so if you would have bought in today, tomorrow you'd be selling PSEC. But I told y'all last week I bought into PSEC, and the reason why I bought into PSEC is that while Johnson and Johnson is good, it doesn't have as high of a payout as Orchid Island, and I could sell PSEC on the 26th, buy Orchid Island on the 28th. It should clear on the 27th. I could buy it on the 27th and have it for Orchid Island by Friday, where on the 29th, Orchid Island needs to be owned. So if I sell it on Wednesday, the money clears on Thursday doing ETFs, and I can spend the money on Thursday so that I have it before Friday, or I have it on Friday. Come Saturday, when the ex dividend date for Orchid Island occurs, I get paid. Then I can sell it on Monday, which allows me to go into the ex dividend stocks we're going to be talking about for December. That's why I did that. I could have got Johnson and Johnson, but Johnson and Johnson is well over $100 a share, and it's giving like, I don't know, 20 cents, 30 cents a share kind of thing, which is less than the 5 cents a share for like $2.80 a share for PSEC, where you're going to get more dividends back for the larger quantity of shares that you're going to get, because the almost $185 Johnson and Johnson would get you about 18 shares or 25 shares of PSEC. So even if you're getting 5 cents a share for PSEC, you're going to end up getting like $20 off of PSEC for every one share of Johnson and Johnson that you get. So I'm like, probably going to go toward the other one. See what I'm saying? That's why we're going to be talking about that. So I would love to buy an apartment and just rent a woman. He meant rent it out. He meant rent out the apartment to a woman because I'm trying to save you, Dylan. I don't know what to do. If you go to the Philippines, you can get two of them for the price of one American. because they like what $750 a person per month out there in the Philippines, and they like almost 2 grand here in America. You, I'm with you, bro. If I had $1 million, I'd go to the Philippines and go rent two of them too. I go rent because you could do a 20-year contract with her. You could do a 20-year marriage contract out there, and you got your two wives. One for the weekdays and one for the weekends, and don't nobody argue. With the greed we got in the Western culture, the women in America don't believe that the women in Dolly is doing it right, but the women in Dolly, 7 women get an allowance from the same man. That man ain't got enough time in his month for 7 women. That means that each woman talked to him for 7 days out the month, and she getting a whole month's allowance. Ain't that like what y'all do with the men in America? The only difference is y'all not fighting each other over the man. Y'all split the man. I don't feel like it. It's your day. At least one of y'all come over there and tell him how he don't give a damn. If he paying for 7 of y'all, look at what Nick Cannon doing. If he paying for 7 of y'all, women don't like the way that sound. But look, let's flip the script, ladies. Let's flip the script. Now, if y'all was the alpha boss lady, y'all paying 15 dudes to be your man. This a group hustle. Everybody getting their share. Don't nobody got nothing to complain about. Just think about that. Now let's get back onto these stocks because everybody came here for the stocks. We came here for the stocks and we're gonna end at the last. So we're gonna give you guys the information that you need to make sure that you capture all of these opportunities. But you gotta be quick about it. You gotta pay attention. If you sleep on an ex dividend date, you will find yourself missing out on some good cash. You might have forgot to set the trade, went to bed, woke up that day, started doing stuff, and halfway through the day, you realize, shit, I missed the trade. You can still do some trades. You can still sell if you miss a trade, but you can't buy if you miss a trade because you missed the ex dividend date. So I'm going to give you a complete dividend capture calendar for December and January, and we're going to break it down the key dates for the 15 different stocks so that you can use this strategy to kick off your new year with a fresh stream of income. The hardest part of your day is spending 5 minutes setting up these trades. Less than 5 minutes because typically it is one trade per day, 2 to 3 trades per week at the most. So you would have to buy one stock today, sell one stock tomorrow, and then buy one stock on Thursday. And that is the hardest part of your last week of November. Do you understand what I'm trying to tell you? And you making money like that. Okay. So if you bought that stock today on the 25th, you should be selling that stock tomorrow on the 26th for PSCC because that's tomorrow's ex dividend date. Then you will be buying Orchid Island on Thursday or Friday morning so that you own it before the end of business day on Friday so that the ex dividend date on Saturday triggers your ability to get paid on Monday so that we sell on Monday. And that is the hardest part of the next 7 days that we got going on right now. 3 trades, maybe 4. So you just got to pay attention. So no shoe showing at the nightclub and then you wake up late and you ain't traded because stock market open at 9:30 Eastern Standard Time. And if you are not awake for that, you'd have missed all of the best trades. Okay. Now for active traders, the turn of the year isn't just a time for parties. It is a season of opportunity because the market has a different feel, especially straight after the shutdown. Those holidays, shortened weeks create some unique volatility, and a whole bunch of companies are looking to close their books by sending out dividends, which means that a lot of people are going to get paid out by finding these plays is one of the best ways for us to make huge capital going into 26. But it is a huge task to organize this stuff. And it means digging through thousands of stocks, checking financial calendars, and looking at how prices have behaved in the past. Work that takes hundreds of hours. That's the work that I've done for you. The calendar that we're about to go through is more than a list. It's a strategic blueprint for traders who know the risk and are ready to act. So we've pinpointed 15 companies from steady blue chip, high yield real estate investment trusts, BDCs, and other such ETFs that we believe offer the most compelling dividend capture setup for the next 2 months. And we update this every month so that you guys never miss out. We're going to be covering the dates, the yields, and the risks for each one. And this is an actionable trading plan for the unique conditions of December and January. I recommend that as we go into this, that you do your research after I've given you this information, because while we have the tickers for all of the stocks down below, the values tend to change because that's not an automatic updated ticker system. For those of you that are watching 16 by 9, for you, those of you that are watching 9 by 16, it's going across the top of the screen. Either way, each one of those tickers are active, valid, undervalued stocks, meaning that they are excessively cheap at about 85% of its original value, still giving off the percentage yield that it used to give off, which means that you're going to be getting higher returns. You want to get into that. So, first, let's be clear about what we're doing here. Dividend capture is a short term trading technique, not the long term investment. You want to do the buy and hold with the satellite capture platform, and we have that show earlier this year. You want to just type in core satellite, and it'll give you the information on all of the stocks that you want to get. Line them up, put your values in there, and watch your money flow. The goal is simple on paper: buy a stock right before it pays a dividend, collect that payment, and sell the shares, or qualify to collect that payment because the payment date is not the ex dividend date, then sell the shares and hopefully net a profit, or find a way to expose growth as well as dividends for a even higher net profit. That's right. I'm preaching the financial gospel right now, y'all. We gonna ride this wave. So everybody who wants to get paid, like getting in there. Special shout out to those y'all that's watching me from Twitter X. If you guys want to comment on the comment section, feel free to do so because your comments will be seen on the screen down below if you're on a 16 by 9 version. Well, Twitter X is on the 16 by 9 version. So y'all gonna see it at the bottom of the screen, all the tickers, and I'll be able to address your comments. So if y'all got appropriate questions, stock information that y'all want to drop in, if y'all heard of a good stock to buy into that y'all been following for a while, y'all can throw that into the comments on Twitter and it will be seen on this show. The same way you see Dylan's comments. And if you're watching us from Twitch as well, y'all can do the same because this is a highly interactive podcast. And we are really on the shorts reel on YouTube, the long form on YouTube. Then I see Twitter over here and Twitch over there. So I got y'all all over the place, and everybody's brought into one big group. So feel free if you have more information, you can share your thoughts. But otherwise, let's go ahead and get on for the ride. And you said Nick Cannon is crazy. Nick Cannon is not. He's financially strategic. He got each one of them pregnant. He tapped whatever he wanted to tap, and he just give them the child support that they're looking for, and he's still able to make his millions. But that man got 5 different children a month apart with the same birth year, which means he had to go to the hospital 5 times in the same year to sign off on each one of his children almost 30 days apart for 5 kids. He was doing a do. That's my idol. I want to get like that. He can't sing, he can't act, he can't drop an album to save his life, but he can tap that ass. I can tell you that. Now, to pull off this dividend capture program that we're talking about today, you need to know 4 critical dates. The first date is going to be the declaration date, which we don't always have when we start speculating what our upcoming dates are going to be. We have an approximation. We set our calendar for the approximation. Then we look for the declaration to verify. When a company announces the dividends, that's when we know how much we're going to get. Usually, this happens about a week, about 2, sometimes 3 weeks before the actual ex dividend date. But it gives us the ability to know if we want to invest in that because stocks like the Zim stock, doesn't always have the shares that we want to have on it. Special shout out to Max the Poser for coming back, changed his name to number one poser. Now, uh, this is going to be our first heads up of the stocks that we have verified. Second, and most important for us, is the ex dividend date. One moment. He said, "Who is Dylan?" Dylan is one of the fans that has come onto the show and has positively contributed to the topic at hand. Dylan and Jesse were both on the show live, over the age of 18, and able to participate into the topics appropriately uh, during the show. Uh, one of uh, uh, one of my favorites, as a matter of fact, him, Michael, Jesse, Mr. Pibbs, uh, Bayside, Mr. Satellite, Usman, and you. Well, you're in there, but you haven't been here for a while. You're like, I should be number one. I haven't been since day one. You're one of the ones that I enjoy. How's your father Joe doing? Tell him that I said hello. Now, the ex dividend date. We're going to get in here real quick. The ex dividend date is the second most important thing that we need to pay attention to, and this is the cutoff date. You have to own the stock before this date, not on this date. You have to have bought it already, and you should still be owning it on this date, and you're capable of selling it on this date. That's not an issue. But you have to own it before the market opens. Typically, the market closes at about 4 o'clock Eastern Standard Time, which means that you have to own it before, that's what, 1 o'clock California time, and like 3 o'clock Central America time. You got to own it before then, because otherwise you too late. If you buy it on or after the ex dividend date, the seller gets the dividends, not you. Okay, so I want to make sure that you understand that. He says he's doing well, but he got diagnosed with prostate cancer. Well, I hope that he's feeling all right outside of that. You need to behave and make your daddy proud. Learn how to invest. That way you can prepare for his retirement or his medical expenses. Now, the third thing is going to be the record date, when the company officially checks who its shareholders are. Now, this date varies because sometimes the record date is going to happen on the last active day of the week, which would be like Friday. So your ex dividend date might be on Saturday or Sunday, but they might check the record date on Friday. It might be right before a holiday, and the ex dividend date might be on a Monday, but they might check it on Friday. So if, for those of us who are trying to get into Orchid Island before they check the records, we might want to get in there on Thursday so that we have it on Friday, so that if they look at it on Friday, we still get our money, even though the ex dividend date officially isn't until Saturday. Pay attention to that. He says, but it's like the least bad case. That's, yeah, so they should be able to operate. So it barely affects him. That doesn't stop his kids from being a pain in his butt. So with prostate cancer, you have to be nicer and don't frustrate your dad. Now, the final date that we're going to be paying attention to, bruh, bruh. I just want you to know, you got him paid. All right, as long as you don't tell me that you got him paid skateboarding, because you gonna cost him more money than you make. Now, back to the stocks. The final thing we're going to be talking about is the payment days, because this is when the cash actually hits your account, which is not always the same day as the ex dividend date, definitely not the record date. Um, the whole game depends on what the stock price does on the ex dividend date. Because in a perfect world, $100 stock paying a $1 dividend would open at $99 on the ex dividend date. If that happens every time, the strategy would be useless. You'd make a dollar dividend but lose that same dollar on the stock, because it takes the share price, the dividend share price, out of the value of the stock on the ex-dividend date. But markets aren't perfect, and that's what we're going to be talking about today. You say, well, I gave him $1,000. I got sponsored, so I gave him all my check. That's good. When you get you a real good job, you should start paying your daddy back for the doctor bills of your birth. My mama made me do that. Soon as I got me a good job, she was like, "This is your bill." I was sitting over here looking like, "Dang." I was in debt at 15. I get $4,000 a year and get paid 1,000 every 3 months from my sponsor. All right. Well, make sure that you can, with sponsors, you must carry yourself with a high level of integrity because any inappropriate behavior that is not authorized or approved of by the sponsor will cause you to lose your sponsorship. So now that you have a sponsor, it is a heightened responsibility that no matter what you do not disrespect the sponsor's image, even if it is just you hanging out with your friends and they're being disrespectful. You have a sponsor, so you have a responsibility to make sure that your sponsor does not uh, 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 disown you the way Diddy's sponsor disowned him. You just got to give him a ton of skate footage. All right, well, you better get out there and skate. You be skating in the dark with spotlights on. Now, the dividend capture strategy is going to be all about profiting from the inefficiency of this model. So we're betting that the stock won't drop by the full dividend amount or that it will recover quickly. And then the other option is that regardless of when we bought in, that even if it does drop by the stock amount and doesn't recover, we bought in so low that it is still below what we're selling when we sold. That's what we're looking at. And this is going to allow us to sell for either a small loss on worst case scenarios or a reasonable gain on best case scenarios, all while keeping the dividend coming in at a guarantee. As I go out with them and they film me and the other guys with me on the team. That's good. So as long as you behave, y'all gonna be fine. Well, apartments on the best investment they pay monthly are apartments a kind of dividend. Apartments are in a real estate investment trust. Apartments are a kind of dividend, but because the rent from the renters, 90% of the profits go to the shareholders, and that's what real estate investment trusts are. Apartments are a type of investment. It is not the best investment because with apartments, you still have the responsibility of property management. You have the responsibility of evictions. You have the responsibility of um, debt collection. You have to renovate the apartments after the tenants dismantle the place. It is the most lucrative one that you can get into, but it does have way more work than stock investment. Okay. When you have enough money from your apartment complexes where the work pays for itself, so you're making more money off of the building than what it costs for the building to be run, and you can put a third party in there to run the building, and then you get the difference. Then apartments are fantastic. But billionaires don't just have apartments; they also have stock portfolios as well, which they can utilize to leverage to get more apartments. Now, apartments are a fantastic way. Real estate is always a fantastic way, 100% around the world, to invest in to gain profits. Buying and holding real estate is the fantastic way to gain profits. Um, but when you start traveling the world, it is harder to watch your investments in 32 countries around the world out of over 200. It is easy utilizing fintech to look at your cell phone and watch your trades on your cell phone. So, providing you guys with the information to invest for those people who don't have a large quantity of land under their name helps you guys build extra spending power, gives you extra discretionary capital, but it also gives you the ability to build up more emergency fund. So for those individuals who lost their jobs for the month of October, if you were getting back the same amount of money or more from your dividend platform, you had an extra level of cash that you could have used to pay for your standard of living before you had to start taking out loans, payday loans, borrow money from friends, missing payments, working out distressed payment options with your providers, your lenders, all of these things that would not have been an issue because you had extra capital lying around. If you get fired off of a job, or if you just to say fuck this job, I'm out, you're making more money off of your stock portfolio than you're making off of your job. You can quit your job and then you don't have to worry about working anymore. That is retirement off of your dividends. Or you can maintain that job, maintain the dividends, and use the dividends to buy more real estate so that you can expand the quantity of revenue that you're getting. But the stock option is to give you an extra, because you don't need to put in work for this, because I did most of the work for you. I'm going to tell you today which stocks that you should grab for the upcoming month. I already have a show up that tells you which stocks you can buy and hold, that you can do a 100% dividend paying stock. You can do a growth slash dividend paying stock. You can do a growth only stock. I've given you all three of them. I've covered them on the show already. And those stocks still hold the same style of value, though the numbers are different. They hold the same style of value. So if you put that roster together, it is like making your own fantasy football team of stocks. And instead of points to make yourself look good for your friends, you're getting cash to take your mistress out on a date while your girlfriend is out of town. Where you're paying for both women's entertainment. This is what we're trying to work on here. Well, that's not really wanted to work on, but I mean, if you're gonna be that guy, I mean, make get rid of your headache and then go have some fun. He said, nice retirement off of dividends. It is, especially if you can set it up with the core satellite platform where you just put the money into the stocks. You can do a drip setup where your dividends are reinvested back into your principal, and then your values continue to increase. And whatever the difference is between what you want to have reinvested versus what you want to keep, you can pocket money to pay for your standard of living and still increase your portfolio. If you're doing buy and holds where you only have to go and check your stock portfolios once a month, you can take the total quantity of dividends that you received over the past 30 days and invest in some of the lowest stocks that you have, the ones that took a dip, the ones that didn't meet the goal marks that you have, and continue to increase your principal and still be able to live off of the dividends. Because the lower the stock value gets, the more shares you can buy of that stock before the stock goes back up. The dividends that you get is a per share payment. So if you can buy, if it used to be $150 for one share and now it's $10.50 per share, you can buy 100 shares for the same price that you used to buy one share. If it was giving you 12 cents a share before and it's giving you 12 cents a share now, instead of you getting 12 cents, you're getting $1.20 off the same stock. So you want to buy in the dip. And if you're going to sell, you're going to sell in the rise. You're going to sell after the rise. And then you take the difference, hold it, so that when you experience another dip, you can buy back in on the dip and continue to expand your portfolio. Now, if you're doing this with ETFs, you can do it a whole lot faster. And my whole core opportunity is to make it make sense for you, but this really makes sense for the average investor. So since we're looking for the obvious risk of the stock price dropping by more than what the dividend is and doesn't bounce back, leaving some people with the loss, we want to be able to benefit from the gain when it bounces back. But even in the decline with the shutdown, this can happen where you take somewhat of a loss in a bad market, or bad news about a company, or lack of buyers, or the everybody sold because they did not have any money to pay their bills because the government shut down for a month and a half. Transaction costs are going to be another thing that you got to watch if you utilize ETF. If you utilize fintech trading platforms that have either a fixed amount for services like Stash app, Stash app, or other trading platforms that does not have a commission based trading kind of situation. You can limit the cost, but you want to watch how much does it cost per sell, how much it costs per buy, how much it costs to withdraw the money, because some platforms charge you to withdraw the money. Stash App, from what I have observed, is an ETF style fintech platform, and that platform will deposit the money directly into your bank account, take money directly out of your bank account, put it towards your shares. It only charges you like $3 a month, $9 a month if you want premium services, but the premium services are not much better than the base model $3 a month, and you have unlimited trades. So whether you do one trade a month or 1,000 trades a month, it costs you $3 a month. Now, other platforms like Acorn or TD Ameritrade that might charge you per transaction, you got to be careful how many transactions you're doing and what is the profits behind the cost, since you're buying and selling frequency is going to be higher than the average buy and hold. Brokerage fees can chew up your profits if you're trading too much in a platform that's going to charge you a lot. So, in situations where people are offering pennies, where high cost can kill trades, you want to make sure that you're doing the right thing and putting your money on platforms that don't cost as much to make a lot more. If it costs you at $3 a month for 12 months, was that like 30, help me out, $36 for the year, right? I think I did the math correctly. $3 a month, $36 for the year, right? So at $36 for the year, you made over $100 in profits off the trade. You did a good job, you know, because the platform paid for itself. Now, we're going to talk about taxes because the dividend capture, we're going to talk about taxes real quick and then we're going to get into the trade. The dividend capture in this platform is almost always not going to qualify for the qualified tax adjustment, meaning that they're taxed at your regular income tax rate in addition to your current income. So, whatever your profits are from your stock option is normal taxable income in addition to whatever profits you get from your 9 to 5 job. So, if you're in the 24% tax rate, it's going to tax you 24%. If you're in the 30% tax rate, it's going to tax you 30% on the profits that you get. For billionaires, this pisses them off because they're usually at the 30 to 35% tax rate. Um, and that's going to be usually higher than the rate that you would have for a long-term gain, where a long-term gain is if you bought and hold it for 60 days before the ex-dividend, 60 days after the ex-dividend, including the ex-dividend, 121 days. If you held it for 60 days before the ex-dividend date, you're likely to have reduced taxation, 0% to 22%, on up to $64,000 if you are a head of household filer, or $97,400 if you file joint under your married status, which is one of the benefits of filing married. If you're the only person handling the stocks, you could get more money off of your husband or your wife and have $97,000 tax exempt off the profits instead of you having $64,000 worth of money covered and them having $64,000 worth of money covered, especially if they don't listen. And and y'all put it together and have a total like $120,000, $128,000 worth of money covered. That's when being single works better, or filing head of household and your partner filing single, and y'all some kind of way work that out where the money works out in your favor. So you're going to have to factor that into your profit margin. Now, understanding these risks, price drops, trading costs, and taxes, after you get past that, that's like the first step in knowing exactly what you're about to do before you start doing it. Now, let's get into this calendar. But a quick and important note before we dive in: the ex dividend dates and dividend amounts that I'm sharing are projections. They are based on each company's historical patterns. These are not official. Some of them are because I checked the ex dividend dates and they have reported for this week and next week, but I have not verified all of them in January yet because typically the announcement date is 2 to 3 weeks before the ex dividend date, and the dates in January would receive ex dividend date announcements in December. So these are projections, right? And these are not set in stone. Some of these they can change. So always verify the final declared dates and amounts before you make the trade. But if you know what stocks to look for and you know what dates you should look for them before, you can start looking for them now, verify the date, make sure that you make whatever trades you want to make before the ex dividend date so that you hold on to the shares before the ex dividend date so that you can make that profit off of every ex dividend trade. Now, first up is going to be one of the favorite ones is Main Street Capital, ticker MAIN. This is a development company or a BDC, a business development company that lends money to mid-sized private companies, and it has a great reputation as one of the best run BDCs out there. With the internal management team that keeps costs down. BDC has paid out most of their income dividends, which is why it's usually having a high yield. Main Street is especially interesting because it pays its dividends monthly and often throws in special supplemental dividends on top of that. The consistency and extra potential make it great as a first candidate. Now, Main Street Capital, MAIN, is the ticker, is going to be in your financial BDC sector. Estimated buy date is before Friday, December 5th, which is before next week, Friday. And the estimated ex dividend date is going to be probably Monday, December 8th, 2 weeks from now. Your sell window should be on or after Monday, December 8th. The estimated payout date is going to be December 15th. They're doing a monthly dividend of around 24 cents a share. And that's going to be a forward yield of about 6 to 7%. So the reason Maine is one of the list, it is predictable. This is going to be one of those schedules that you can rely on, relatively stable pricing around its ex dividend date. So you're not going to see extreme behavior. And the risk is like with any other BDC, it is sensitive to the economy, which means that it would have had a high impact with the shutdown, and a slowdown could hurt the company in its loans portfolios. However, its focus on senior secured debt gives it a bit of a defensive edge. So let me give you the name of the company and the ticker. I want you guys, for those of you that are watching us on YouTube, y'all are going to get the ticker in the comment section, and I'm going to put it up there on the screen for everybody else. Uh, Typically, if you come back to the show, hello 6155-ish. You said you're interested in learning. If you grab a pen and paper, that's exactly what we're doing right now is making recommendations. Main Street Capital, first recommendation. Follow along and you're going to get more. We're going to be doing this all show. Now, next, we're going from single companies to the whole market with Schwab US Large Cap ETF. Ticker on this one is SCHX. It just connected. Oh no, no worries. That's good. That's good. You connected at about the right time. Make sure that you like and subscribe, uh, and share this with people that you know that might need it. Because everybody who's watching this on YouTube, Twitter, and Twitch are getting this information in real time. And you guys can take this, do your research, get your setups for your trades for tomorrow so that you're ready to rock and roll, so that you know what you're gonna be doing before the stock market opens at 9:30 in the morning Eastern Standard Time. Now, Schwab US Large Capital ETF is the next one. Now, this might seem like an odd choice for dividend capture, but it's here for a reason. Risk management. Schwab tracks over 750 of the largest US companies. The dividend yield is pretty modest, but what you get in return is a much lower single stock risk. Capturing a dividend from an ETF like this is a bet on the stability of the entire large cap market for a couple of days. The trading volume is massive, so you can get in and out of big positions easily. Think of it as a high probability, lower reward play. So if you were moving around 50 to $100,000 and you use an ETF like this, it would be easier for you to complete your trade. Um, this sector is going to be an ETF large cap blend. Estimated buy date is Wednesday, December 10th, 2025. Estimated ex dividend date is going to be Thursday, November 11th. Selling window is going to be Thursday, December 11th. You want to start trying to get it out first thing in the morning. Your estimated payout date is going to be late in December. We haven't quite figured out the exact date yet, but it's going to let you know closer to the first. Now, this is a quarterly dividend stock, and it's going to be paying about 45 cents a share. So, for a forward yield of about 1.4 to 1.6%, we're not going to feel that 1.4 to 1.6% because we're only going to hold it for about 2 or 3 days. The logic here is all about the trade mechanics. The dividend is a near certainty, and a huge ETF is far less likely to have a sudden company specific price drop that wipes out all your gains. So the main risk is the whole market taking a dive on that specific day. But for more conservative capture, Schwab is a solid choice. Now, our third stock is a big name in high yield worlds, Ultra Group, ticker MO. And we got a lot of stocks up here. Now, Ultra, let me put this up here for y'all. Ultra is the parent company of Philip Morris USA, which sells Marlboro cigarettes in the United States. Even with smoking rates declining, Ultra has kept growing by raising prices. That's why y'all paying $10, $15 a pack for cigarettes. More importantly, Ultra is a dividend king. Having raised its dividends for over 50 straight years, the stock yield is often over 8%, which gives you a big cushion for a capture trade. A larger dividend means the stock price doesn't have to recover as much for the trade to be profitable. Now, the buying date here, you got to buy it before Thursday, December 11th, and the ex dividend date here, you need to sell it on that ex dividend date of December 12th, because that's your sell window. Now, this one's going to be a quarterly dividend stock between 98 cents and $1 share. It's 90 cents to $1 per share for the dividend. And this is going to be for a huge reward yield over the course of a year if you're holding on to this one between 8.5 and 9.5% yield return on a buy and hold. Now, Ultra is one of the ones that we have on the list because its dividends is just so massive. It makes the trade more forgiving. Now, the risks are also massive and well known. You've got the lawsuits, FDA regulations, and falling cigarette sales. This is definitely high risk, higher reward play that relies on that big dividend to smooth over any price weaknesses. Moving to mid December, we're looking at real estate with Axis Property Trust, ticker ESS. And this is a real estate investment trust that owns and operates apartments buildings on the West Coast, mostly in California and Seattle. So when California burned to the ground, this company was heavily impacted. This focus is both on its strengths and its weaknesses because these are tough markets to build in, which lets Axis charge high rents. As a real estate investment trust, Axis has to pay out of its income as dividends. It's also a dividend aristocrat, having increased its dividends for nearly 30 years in a row, which tells you a lot about the quality of its assets. The buy-in date for this company is going to be Wednesday, December 17th. The estimated ex-dividend date is going to be Thursday, the 18th. Our sell window should be around Thursday, the 18th, either on or after the 18th. The estimated payout date is going to be sometime mid-December 2026. We haven't gotten the exact date yet because they're going to be giving us that information between the second and third week of December. And remembering, this one is a quarterly dividend, around $2.50 to $2.60 a share, which is easier for you to get. This stock is 4 to 5 shares of this stock is the same price as a pack of cigarettes. We got a gentleman that says gold on fire, the dollar sucks. Well, if you're not in cryptocurrency, you're winning right now. And if you're betting on gold, you might as well bet on silver because silver is undervalued. Ah, you can buy gold or stocks. It is not better for you to buy gold than to buy stocks because gold only has value when you own it. It increases its value, but you only gain capital off of gold when you sell it. And you only can sell it when it is above what you paid for it in order for you to turn a profit, where your money is sitting still. Where since 1970, when it was about $200 a share, it's now $5,000 a share, $4,000 a share right now. Well, $4,000 an ounce for gold. And since January, when it was at around 3,700, and the highest that I've heard it been so far is about 5,200. Now it's closer to back down to $4,000 a share. If you bought and hold gold this year, you probably would not have much more than what you had when you started if you didn't sell when gold was at 52 to 55 and then bought back in when it went down to 37, where you would have only made like $700 worth of profits per ounce on the quantity of gold that you would have had. So you have to catch, like he's saying that it stacks on a bubble. You have to catch it the same way I'm telling you to catch these dividends. Safe Haven AI is a bubble. Okay, well, that's a good stock we can go take a look at, and then I can tell you guys about it coming soon. Now, ESS stock is supposed to give you at $2.50 to $2.60 a share a forward yield of about 3.94% because it's considered a blue chip real estate investment trust. Its stock is liquid and the dividend is secured. So the price action around its X date tends to be pretty ordinary. The main risk is the geographic focus because a downturn in West Coast tech industry could hurt rents. But for a high quality capture, ESS is a top tier name. Now, our fifth out of 15 we're going through today is probably the most famous and well known monthly dividend stocks on the planet. Realtel Income, ticker O. Literally trademark the name, the monthly dividend company. We didn't know about this, right? It's real estate investment trust that owns thousands of single tenant retail properties like convenience stores and grocery stores. This is a business model that is inherently beautiful in its simplicity. Retail Income owns the building and the tenants pay for almost everything else: taxes, maintenance, and insurance. This creates an incredibly predictable stream of cash to fund that famous monthly dividend. Uh, Validations are extremely high. Uh, say no to stocks. Well, that's a good um, understanding to have, but volatility is what makes the money. So you're banking on the volatility. So you want to say yes to stocks in the most volatile markets. When the stocks continue to dip, you want to buy in on the dip so that when things become stable, you are experiencing the rise. You want to be on the water before the tide comes in so that you can ride the wave. You don't want to be on land running to the water hoping to catch the tide where you're going to be under the tide or taken out by the wake. You want to be on the top or as high up as you can get on the wave. Now he's saying 2026 a crash is coming. By far, I expect something to happen with the shutdown happening on the 30th because I believe that it's just going to happen again. I don't believe they're going to agree with one another. Ah, simplicity. Correct 3 years ago, but not today. No, it is actually more effectively accurate today because the stock had already taken a massive dump in February and another one in April by over 700%. It's the lowest it's ever been in the last 30 years. So certain stocks that are undervalued right now are at their base levels. The stocks that you see on the bottom of the screen for 16 by 9, at the top of the screen for 9 by 16, lowest they've been. Tesla just took a dump because they're no longer getting that tax credit for EV cars. Some of these stocks used to be so expensive that you couldn't afford to get it. The average person can grab these stocks right now because a lot of the stocks that I'm going to talk to you about are under $25 a share. Some of the stocks that I'm talking about, like the one I just told you about, the $2.50 a share, some of these stocks are under $5 a share. You spend more money on a Big Mac than you spend on a stock option that's going to pay you money back every month. So while you believe that it's not a good idea to buy in stocks, it is a good idea to diversify your portfolio. But if you put your capital towards a cash paying stock portfolio and use the dividends from the cash paying stock portfolio and buy gold and silver, you can still balance out your portfolio in a fashion where you have the guaranteed growth and security from gold and silver that when the stock is volatile, you can still experience the growth, but you still get cash dividends that you can pay your rent when the gold and silver is not going to give you any money until you sell it. We just had a guy tell us yesterday that he was selling gold at like $2,500 an ounce. And I'm looking at it like, bro, it's almost 4 grand an ounce right now. If you're selling it at the pawn shop for 2,500 an ounce, you're getting ripped off. It's only worth what someone else is willing to pay for it. But as long as you own a cash dividend stock, it's gonna pay you what they said they was gonna pay you until they adjust the dividends. So it's correct today, not just 3 years ago. But go ahead and do your research and try to verify and prove me wrong. Why would I buy right now? Would be able to coin XPR Circle Crypto. Oh, right. So you're going to be one of the ones that lost $100,000 in crypto because crypto taking a shit right now. So go ahead, circle cryptocurrency right now because I was just about to cover crypto next Tuesday. Crypto went up to as almost as high as 150,000 in 25, and it is back down below 90,000 right now, which is a $60,000 dip. Not one stock that I've talked to you about today so far has taken a $60,000 dip. So go ahead, get into crypto. But I'm going to tell you, crypto starts declining right after Halloween, 2 weeks before Thanksgiving, which was about 2 weeks ago. It's going to have a short rise the last week of November, which is right now, the first week of December, which is next week, and then it's going to go back down again before Christmas. Right after Christmas, that's 7 days before the New Year's, when all of the rich people put all of their money into crypto so that they don't have to claim it on their taxes. That is going to be the last rise you're going to have in January, before January, and then it's going to be on a steady decline until June, where it might reach its lowest point in April. This is the trend that crypto has been on. So why buy in when everybody's selling? Why buy in this week into crypto when everybody's selling? You will get it higher than what it costs, and they're getting rid of it, which means that the value of crypto is going down. You're going to end up with a crypto wallet that is less than what you started. But I mean, it's up to you. I'm not going to tell you what to do. You don't sell gold because the dollar is going down. Gold you hold, bro. How do you pay your rent if you ain't got no money? You get, you're going to give your landlord gold bricks? Because when I'm giving you cash dividends is going to pay your bills and you can hold the cash stock. Or you can follow the dividend rotation strategy, keep the money in the portfolio, take the dividends out, and pay for your rent, pay for your trip to Tahiti, buy you a brand new car. Make it make sense for me, bro. Where's the logic? I love the name. And liquidity is everywhere for gold and precious metals, easy to sell. No, it's not. It's not easy to sell. You got to prove where you got it from and where you're bringing it to. No, sir, you buy crypto now because ETFs are coming out pushing the price higher. ETFs are coming out pushing stocks higher. What you talking about? Prove to me what you're talking about, because I haven't seen no evidence yet. He said, "Yeah, I hope FXT goes up, gain. It's the only coin I have, but yeah, I wouldn't buy crypto now." Dylan, you know what you're talking about, bro. Crypto is not good to get into this time of year. Crypto is good. If you would have bought into crypto in July, August, September, you would have been fine. Peak at October, it is time to sell. November, it is selling. It's going to have one more rise in December, and that is it. They have gotten used to Trump being in office, and everything changed when Elon got out of the White House. Crypto is not going to be where it used to be. Okay, here we go. Hold on, y'all. And then we're going to get back onto these stock trades. He said when the spot ETF come out for Bitcoin, Bitcoin went from 80,000 to 120,000. And right now it's about 89,000. So you're welcome. So even though it had a little bit of a spike right when Trump got into office this time last year, and it had a little bit of a spike and was running a good wave till about April or May, it peaked and then it dipped, just like I told you it was going to do. So you do you. I respect it. But I am telling you the overall trend. Now, if you're doing trade bots and you're doing micro trading and all this other stuff, you might be able to find some kind of trend in there that's different from the overall cryptocurrency platform. But from what we've seen, it spikes in October, right after Halloween. It dips right before Thanksgiving. It goes back up one more time between Thanksgiving and Christmas. It goes down before Christmas, and then it comes back up one more time for the most that you're going to see in 2025 between Christmas Day, the 25th of December, and January 1st, and then it is on a decline between the 1st of January and maybe I want to say as strategically as the 15th of April. So if you buy and catch it up, get that spike. But buy and hold on cryptocurrency, not now. You want to buy at the lowest time of the year, which is going to be April 15th, April 21st. Buy at the lowest time of the year and continue to add until about August, and then just hold and then sell. He said the spot ETF just came up for XRP, and XRP is trading at 220 a coin, getting ready to push to $10. Hopefully, you can only speculate on that because we just had it in the news that the cryptocurrency just took a massive dip 2 days ago, and I just haven't covered it because I already had something that I was going to cover on the show today. He said, "No, sir, you're wrong. ETFs are bringing liquidity into the market. We will see, because so far that is not the case. So far today is Tuesday, and since Friday, that is not the case. It hasn't happened yet. So when it does happen, then I will be able to officially say on the show that for the first time in my financial history on this podcast that I was wrong. But so far, I've never been wrong. I've never been wrong. I'm not gonna tell you that you don't know what you're talking about because you clearly do. But what I am gonna tell you is that what you're hoping to happen is not likely to happen. It's not likely to happen. The hype from media is it's gonna impact the market a little bit, but at the same time, it is still not gonna get the results that you're hoping for. So the best way to get on top of the wave, buy into your crypto that you want to buy into your crypto, hold the crypto and see what happens. And then if you spike the way you believe that you're going to spike, come back and show me. Hats off to you. But when it dips, I will be sure to do a show to specifically tell you that I told you that that was going to happen over the next 3 weeks. Because we're in November. I'm covering it first week of December. And if I got to cover it again on the last week of December before the end of the year and the first week of January, I will continue to update you on how cryptocurrency is going exactly the way that I have projected it. And we'll see. It says ZRP is XRP is it's owned by Sam. What is that? Bankman Fried. Whew, why would they name their child Bankman Fried? I respectfully disagree with you. That's fine, sir. But I mean, to come here while we're talking about trading stocks and tell me, don't trade stocks, take all your money and put it in cryptocurrency. First thing I'm going to tell you is that you need to diversify your portfolio. So you shouldn't only have stocks, you shouldn't only have cryptocurrency, you shouldn't only have gold and silver. for the average everyday American that is supposed to be trying to build their portfolio from this is their first year of trading, uh, from owing money to everybody to actually saving some money and investing some money and building some type of retirement. Bitcoin does not pay you dividends. You have to sell it in order to have money, in order to spend money. Gold and silver does not pay you dividends. You have to sell it in order to have money to pay your bills. Stocks is the only opportunity that I have found besides real estate that pays you to own it so that you can keep it and get paid for keeping it and use that money to pay your bills. Now, since that is the objective of the type of portfolio that we have built today, and that's our discussion, for you to tell us, don't do that because that's not going to give you the most quantity of money on paper that you can get. I mean, you can probably find more money on paper, but you're not going to have any money to spend when you can't get to an ATM machine because the money that is directly deposited into your account that you withdraw out of your bank account is the money that you have access to. And that money is only accessible after you have sold gold, silver, or Bitcoin, not before. So if you have $1 million in Bitcoin, what's the name of that guy? Naruto, or whatever that guy's name was, they had like $800 billion in Bitcoin and he couldn't access his wallet. He could be a multi-billionaire on paper, but he's broke as fuck because he can't access his wallet. So I'm talking to you about a way for you to put your money in a place where your money will give you money back every month. And you can put that money in your bank account every month. And you can take that money out the ATM machine every month. And as long as there's electricity near that ATM machine and you still got a functioning debit card, you can hold that money. As long as there's power in the building, even though there isn't a functioning ATM machine, the teller at the front desk will hand you your money every month. And you cannot tell me that crypto, gold, or silver can do that. I am trying to help the average American balance out alternative ways to have revenue generating outside of killing themselves on a 9 to 5 or a 20-hour a day work schedule 6 days a week, where you have alternative ways to cover your bottom line. Now, people who are good off, you don't really need it. You can leave it there and ride that wave. It's risk tolerance. You can put it somewhere, you can let it ride that wave by all means. That works. But at the same time, there is another way to go about getting it done. And all I'm talking to people about is the other way. So I'm not saying that Bitcoin is the worst thing in the world to invest in. And I'm not saying that you can't make money off of Bitcoin. Bitcoin thrives off of volatility the same way this stock market will thrive off of volatility. You will make enough money off of volatility that you're not going to struggle. Bitcoin might turn you over 800% return over the year if you do it right. This might turn over 168% return over the year if you do it right. But at the same time, you could lose it all with Bitcoin. But if you're buying and holding blue chip companies and you are just holding those blue chip companies, these companies have not gone out of business over the past 25 years. You're not going to lose it all with these companies. It's less risk than Bitcoin, but it is a consistent capital that's coming out. And that's not something that you can deny. Now, can you personally argue that Bitcoin can give you more money than stock trading? Yes. But can it pay your rent every month? No, because you have to have a successful trade, deposit the difference, and then reinvest whatever's left back into the Bitcoin in order to be able to have enough money to pay your bills. Then you got to also wait for sometimes 2 to 6 weeks for the money to clear before you have the money so that you can do what you got to do. So there's a lot of stuff going on. You have to sell Bitcoin and then take some money out of the sale in order to pay your rent. But owning cash dividend paying stocks, you don't got to sell nothing. You can just take all the dividends and go pay your rent. You can have $1 million of Bitcoin. You can have $1 million of dividend paying stocks and you still have to sell your Bitcoin to pay your bills, you would lose out on the money that you sold to pay your bill to sell your Bitcoin, but you would still have your $1 million if you was getting the dividends to pay your bills. And off of between 15 and 18%, you'd be getting between 150,000 and $200,000 worth of dividends, maintaining $1 million principal, not having to sell nothing. Now, explain to me how Bitcoin is better than that. You don't have to be as experienced. You don't have to know the entire market. You don't have to take the risk. You can just put your money up there, leave it alone, and let it do what it's do. Take the difference, pay your taxes, and let it do what it do. Tell me how Bitcoin is better. Dylan said, take all your money and buy version 6 of the Bible and sell them door to door. If you No, you got to buy version 6 of the Bible, Dylan. You got to put Donald Trump's face on it on a gold foil wrap thing and then resell the Bible back to everybody who will pay 10 times as much because Donald Trump's face is on it. I like the dividend thing. I just don't know enough. But that's exactly what we're doing it for. Buying and holding a stock is for the amateur investor. Flipping Bitcoin is for the expert investor. Buying and trading stock is for the moderate beginner or reasonably advanced. Options and puts are for advanced and expert. But for the everyday trader, the everyday, I just started doing this year. I just started doing it in the last 2 years. Buying a stock, holding on to that stock, and collecting the money from that stock is the easiest thing that you can do. And you don't need to know about computers. You don't need to know about crypto. You don't need to know about anything other than if I buy this many shares, I will get this much money, and just don't sell it. You can follow, you can learn about it as you do it. Follow the trends. You can look at the company success rates. If you're doing, I'm giving you all blue chip companies. I'm telling you some of these companies still here from 30 years ago. So they're still here. They're not going out of business. So these are ones that you can hold on to and grab them and hold on to them. Tesla's in there. Johnson and Johnson is in there. Coca-Cola is in there. Shell is in there. Chevron's in there. Exxon Mobil is in there. I'm telling you. BBAI, Oracle, who's in that TikTok trade. They're in here. They're in here. It's up to you if you want to trade into it or not. They value gold in 1934 and they revalue gold again in 1973, 40 years later. And here again, 50 years later, they will revalue gold again. Right. But it takes you 50 years to get a profit. Some of us ain't going to live 50 more years. Some of us in our 40s and 50s right now don't see ourselves waiting until what, 2075 to say, I'm going to sell all my gold. I bought it at 4,000 an ounce and I'm going to wait until 2075 and sell all my gold. We got some business right now that's still trying to catch up on their bills from last month. I'm just telling you where to put your money to help you out. Exactly, Dylan. It does sound reasonable. Well, I'm giving you, I'm making it make sense. I'm making it make sense. And you can fact check what I tell you because I'm not going to say that the guy is wrong about what he's talking about with crypto, but I am going to tell you that selling everything and going to crypto doesn't make any sense when you can make cash dividends off of stocks that I'm talking about right now today. Oh, okay. So he's all right now. Gold's on the books at $42 an ounce. It is $4,200 an ounce, not $42 an ounce. And they will reevaluate gold within the next year, probably. $20 an ounce. So you're saying like $2,000 an ounce to buy gold today? Because right now silver is about $42 an ounce, 42 to $57 an ounce. Gold is about $4,200 an ounce. Okay, right. You were trying to put that K in there. I understand what you're saying. I'm following you. I'm following you. I'm just reading what you said and I'm clarifying it for them because the people who read the comments wasn't following what you were saying. I'm following what you're saying. Yeah, 42,000, $4,200 an ounce should go up $2,000. So you're saying that gold should be hitting. It's not going to be 20,000. It's not going to be 20,000 after the reevaluation. I don't know. We'll see about. Well, hold on. It might be 20,000, but I don't know for sure because gold is becoming more scarce, but it is on the same running platform as uh it is running on the same platform as silver. And while gold and silver are running side by side, silver is cheaper to buy, and silver is going to expand at almost 10% the value of gold. So if gold goes up to 20,000, silver is going to be 2,000. So why not at $47 an ounce go and buy you 1,000 shares or 1,000 ounces of silver, so that when gold reaches 20,000 and silver reaches 2,000, you got you a 200% return. Now, since we talked about precious metals when we were supposed to be talking about dividend rotation strategy, let's just look at the fact that if you're going to buy into a precious metal, why don't you buy the undervalued one? It's cheaper. If all you got is $1,000, you can buy a quarter of an ounce of gold or you can buy like 50 to 100 ounces of silver. When gold goes up, silver goes up, and then you can just sell silver and then you have more money to buy gold. Don't nobody think about that. I agree, silver's a good move. Exactly. So you know that I know what I'm talking about. And while I'm not doubting your knowledge and your skill set, what this dividend rotation strategy was for is not the ultimate 100% of the money that you can get out of any trade. This is the kind of money that you can get where you can put your money up somewhere, get more money that you would get back from a high interest money market account. And you'll be able to live off of the interest off of this money. You can travel the world with the money that you're getting off of this money, and you don't have to worry about where you're going to pay your bills from because your principal is never touched and you're living off the dividends. You can't do that with Bitcoin. You can't do that with gold and silver. You have to sell gold, you have to sell silver, you have to sell Bitcoin in order to live off of the difference between what it was when you bought in and what it was when you sold it. That is the only difference between stock trading, doing buying and holding of stock trading, than what you would with um, gold and silver. Now, I'm not saying don't get gold and silver. I'm just saying expand your portfolio. You can buy into the stock market, use the dividends from the stock market, buy into gold and silver, use the difference from the stock market, buy into crypto. You still have your portfolio, your trading portfolio has stocks in it, ETFs in it, real estate investment trusts in it. And you take the dividends and you can invest it into gold and silver. You can take your dividends and invest it into Bitcoin, where you're now generating a larger portfolio from the high volatility of Bitcoin, offset by the low volatility of gold, silver, offset by the guaranteed cash payout from your stock option. And then you can diversify that into leveraging all of those assets into getting cash loans to buy real estate that can generate you cash dividends. It is expanding the facet of revenue that you can utilize. It is expanding the liquidity that you can access. It is expanding the quantity of leverage that you have in a deal. One way is not the only way, but one way is one of the ways. And I am talking about one of the ways. That's what I'm trying to get you to understand. Is that there's a spider in your couch over there, your left shoulder. I don't have spiders on my couch on the left shoulder because my dog would have ate it. I'm gonna collect soda cans and spray them gold. Will it work? Well, no, because soda cans are mostly made out of, I do believe, aluminum, and they're going to sell that by the ounce. And the gold is not necessarily actual gold. It is a gold color, which could be like radium or something like that. So it's not going to have a monetary value to it. So the money that you got from spray painting it gold is going to be lost in the price of aluminum to melt it down. And you know what I mean? And then they're not even going to give you full value for it because they're going to make a profit off of buying it off of you. Yeah, but I still think you drink the Kool-Aid when you talk about gold. Uh, Gold is being suppressed right now, and it will happen overnight. Revolution, you will wake up in gold will be $25,000 an ounce. Shit, I was telling everybody about Bitcoin when I told everybody to get that Bitcoin before Trump got into office, and it was at 50 grand when I told everybody that. The what 5 days, 7 days later, I had that conversation the last week of October, November 5th. Bitcoin was at damn 90 to $100,000, like a $50,000 bump when I said that was going to happen. And I said that it was going to keep climbing because he's in office. He was partnering with Elon Musk. Tech was Trump was talking about. And through March, Bitcoin was reaching record highs. After Elon Musk and Donald Trump parted ways, Bitcoin started dropping. Doesn't mean that it's not going to go back up. It just means that this time of year, regardless of what the market trends are going to be, this time of year, the cryptocurrency declines because rich people take money out for Christmas. They take money out for Thanksgiving. And since rich people take their money out for Thanksgiving, they take money out of Thanksgiving. They're going to sell their crypto stock so that they can have money for Thanksgiving, so that they can have money for Christmas. Then they're going to put whatever money is left back so that they don't have to pay taxes on the money. I am telling you the trends. Now, you might follow the intricate little hour by hour trends. I'm telling you the overall trends. Now is not the time, if you don't know what you're doing, to buy into Bitcoin because Bitcoin is going down right now because rich people are selling for Thanksgiving dinner and they're selling for Christmas presents. And then after that, we'll take a little bit of money off to the side for the New Year's party and put all the rest of the money back. So catch it on a dip Friday after Thanksgiving and then catch it on a dip on the 24th of December, right before Christmas Day, And that's whatever spike you get, that's what you're going to get. Is that I agree with you with stocks. Wait for the downturn though. Wait for the 2026. A sell off will happen. Then go in and buy your blue chip companies. You can do the dividend rotation strategy right now, buy and sell, only hold the stock for a couple of days, then watch that dip happen, catch the whole dip, and then buy and hold. We can both agree on that. I'm not talking about buying and holding the stocks just to buy and hold the stocks, knowing that there's going to be a dip in all of the stocks that I'm talking about right now when the shutdown happens January 30th. I'm not telling you that. If you want to, you can. I am telling you right now that if you were to buy the one, if you had bought the stock PSCC that I'm talking about that was supposed to be bought today, selling it tomorrow, I bought it on yesterday, matter of fact, and I'm selling it tomorrow, I would have held the stock for 3 days and I'm going to get the dividends off of that stock tomorrow. Well, technically, I'm qualified for it tomorrow and I'm going to get it later in the month. But the fact is that the money's going to clear for me because I'm doing it through ETF trading. It's going to clear for me on Thursday. I can buy into another stock on Thursday, have it by Friday, qualify for the dividends by Saturday. Three trades. Buy on Monday, sell on Wednesday, buy on Thursday, 4 trades, sell on Monday in 8 days' time and made a stack of cash. And I don't have to worry about the volatility of Bitcoin going down right now. He said, no, sir, evolutions are in a bubble. Okay. And while we're not in the bubble, you're talking about something that hasn't benefited anybody as of yet. Well, the people who were in the bubble when Trump first got into office, they made theirs. If you bought in at 50K and you sold at 125, you made your money. But if you buy in right now at 87, when it hit 75, and I tell you, I told you so, then you're gonna be like, well, he wasn't wrong. Now, if you right, if you right, and it 87 and it 155 by January 1st, then you can tell me you told you so. I can finally admit that I was wrong about finance. But I can't hang up my hat on finance because I haven't been wrong in 20 years. And I started doing this podcast 2 years ago because I haven't been wrong. I've been doing this all year and I haven't been wrong. Every prediction that I've made actually came to fruition. And I have people like Michael on the podcast that fact check me every day, and I am not wrong. Well, outside of when Old Spice first came out for men, because it originally started from women's cologne and then turned over to men's cologne, but he was able to fact check that. That's the only time I was wrong. That wasn't even about money. That was about cologne. But when it comes to money, not one scenario has somebody been able to fact check me and say, see, he's wrong. Because I'm not. Now, sliding into, I really appreciate you. Special shout out to Bra Logic. He said, you know what's interesting? A basic man starts talking about everybody buying in stocks. That's when you sell. This is this is from a story from 1930. History repeats itself. Interesting. So when I tell you, if you buy and everybody sells, then they're going to sell against my buy, which means that I'm going to buy in lower and sell higher. If they don't listen, they don't listen. I tell you to do your research. I don't tell you to just take my advice for it. I'm not asking you to buy my membership or join my class or sign up for some stock trading scenario where I can help you figure out how to make money for you. I'm telling you, hey, this is what's on the books. You can take the time out of your day and you can go ask the Google lady, and she'll tell you everything I'm telling you is legit. And then you decide where you're going to put your money at after you've done your research. Now, you don't got to give me $1 for that. So if Bra Logic is listening to me say buy certain stocks on certain days going into the next 2 months, if you're going to sell against everything I tell you to buy, well, I can sell. But when you sell, just know I'm going to be there buying and I'm going to be catching the difference. And what you lost is what I'm going to gain. I'm just going to let y'all know. He said, no crash is coming. Buy gold and silver tomorrow. Sell all cash, all stocks. Exactly. So since he is telling you, like he said, when an average basic man starts talking about everybody buy, you sell. So since this average basic man is telling everybody that a crash is coming, go buy gold and silver and sell all of your stocks, now is not the time to sell all of your stocks because all of the rich people are going to be doing exactly the same thing. They're going to be running away from the stock market. The stock market is going to go down. And while the stock market is down, that's when you take the average escalation into buying more of the stocks because all of the companies around the world and all of the stock market in NASDAQ is not going to plummet because of the crash that's coming. This is that 1999 behavior. Sell everything. The world's coming to an end. And at the end of the day, you're going to get shit dirt cheap. And then when the stock market bounces back in March, because the shutdown happened in January and probably going to run through February. And when the shutdown stopped in March and that 10% plus increase that you get off of the stock, you're going to buy them dirt cheap, cheaper than a Happy Meal. And then when you benefit off the dividends, he's going to be the one that said, get rid of all of your guaranteed cash dividends and go buy into gold and silver and hope that eventually it'll make it to a level where you can get money back. Now, I'm telling you to invest in something that is going to pay you regularly until you sell it. He's talking about something that you have to hold until the value increases high enough for you to sell it. On paper, uh, 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 an ounce of gold at $4,000 an ounce is $4,000 an ounce on paper. When it goes up to $5,000 an ounce, it's $5,000 an ounce. And when it goes to $25,000 an ounce, it's $25,000 an ounce on paper. If you sell it at $25,000 an ounce, you would have made $24,000 profit. No, a $21,000 profit. If it dips before you sell it, what it could have been and what you got are two different things. You have to sell it in order to realize profits. You can leverage against it. You can take out a capital loan against a $25,000 value at about 68 to 71% and leverage that to go and buy into things, but you don't have any money to pay that back because you don't have any dividends from your stock option, which means you got to pay for it out of your paycheck. Again, you need a diversified portfolio. You need to have cash coming from somewhere other than your 9 to 5 job and then get gold and silver and Bitcoin so that you can get high volatility, high profits off of Bitcoin and get high profits from the gold and silver because that's a growth stock and get the cash dividends from the stocks that you're holding on to and not have to pay anything back from the leveraging that you do with this massive portfolio and take that cash loan and buy you a brand new Bentley and take the dividends from the stock and pay off the loan so that your 9 to 5 job don't got to pay for the brand new car you just bought. Your stock option paid for it. The gold, silver, and Bitcoin paid for it. The brand new house that you bought and paid for, you got the deed to the house. The gold, silver, and the Bitcoin paid for that. The stock option paid for that. You still got your 9 to 5, the money going straight into your pocket. That is something that gold and silver is not going to do with Bitcoin because you got to sell it in order to pocket the money. So he said, I wish you luck, sir. I'm going to take off. You have a good night. It was nice talking to you. I appreciate you. Whether you like and subscribe or thumbs down on it, it's up to you. I'll see you next time when we talk because we're talking about Bitcoin next week. So make sure you come back next week so that you can correct me if I'm wrong about whatever Bitcoin that I talk about next week. I hopefully should see raw logic in this podcast next week, Tuesday. Now, he said, that's right. If market crashes, just keep buying when stocks are dirt cheap and get ready for the rise. It will double what you lost. Thank you very much. Thank you very much for individuals who have broader scale knowledge. I really appreciate that. Now, where were we? We just finished talking about the O company, okay? And the O company is supposed to be December 29th. It's supposed to have a payout date mid-January. It's supposed to have a monthly dividend of 26 cents a share, and it is a forward yielding 5.5 to 6% range. Realty Income makes the list because it is a rock solid reputation and liquidity, and its stock is a favorite of investors, big and small. So there's always a deep market trade on this one, and risks are tied to the health of brick and mortar retail and rising interest rates, which can make this stock less attractive compared to the bonds that you could get your hands on. Now, we're heading into the higher risk, higher yield part of the list. Prospect Capital, ticker PSEC. That's the one that's ex dividend date is on the 26th, which is today after midnight. You can sell tonight. Set up your sell before you go to bed. Like Main Street, PSEC is a BDC. It finances mid-sized U.S. companies, but its portfolio is a bit more complex. PSEC is famous for its massive yields. And hold on, let me grab this because I got to do two things now. I got to grab this and throw it into the comment section for you, and I also have to grab my other headset because it just told me the battery was low. I'm sitting over here looking like, what? Where's the other headset? Right over here. See, I talk so much on a podcast, bro. I didn't kill the battery on the headset. Hold on, y'all. Give me a second here. This is why I bought two of these. There it is. Special shout out to your boy. What was it? Red Box. He said Red Box, Bread Box, Don Box, something like that from yesterday. I bought two of these on Temu. They were like $22 a piece. The power on these like 18 hours out of the day. I'd be forgetting to plug them in some of the time. Let me plug that in now while I'm talking about it. I bought two of them because it takes like 30 minutes to an hour to charge it. But the fact is that it lasts the rest of the day for you. And I started using this one yesterday during a podcast, and then after I finished using it, I forgot to plug it in, didn't turn it off. So it's been on standby and I've been using it all day. So since this time yesterday, that headset ran yesterday's podcast and this headset will run today and tomorrow's podcast. So that's a very good battery life. And so for $45 with shipping, I got two wireless Bluetooth headsets that are almost invisible. I really like them. He said, "Where you been, guy? Bro, where you been? I've been over here telling everybody how to make, save, and invest money." Now that we've talked about prospect, let's go ahead and keep going because we got a long list. We're on like page 36 of 83, so I got 50 more pages of information to give y'all. That's what I'm trying to tell you. This guy's sitting over here telling me that I don't know what I'm talking about, kind of, and I'm like, hey, your opinion is your opinion, but when you see what's happening, you're gonna be like, shit, that man was right. Now, when I'm right, that guy is gonna be one of my biggest followers. Now, PSCC is famous for its yields. I'm gonna put this back up here. PSCC is famous for its yields of massive dividend, often in the double digits and paid monthly. That's one of the reasons why I go to this one towards the end of the month. That huge yield is exactly why captured traders are interested. It provides a big income cushion, meaning the stock price doesn't have to recover as much for the trade because it's like 0.5. So it's 5 cents. That's it on the trade. And it's $2 and some cents a share. Doesn't hurt. It's like three shares for one share of Orchid Island. It doesn't hurt, but it's running roughly 18%, I think. Let's look at it right real quick. You have your estimated buy date was, yes, you wanted to buy it before today. If you're buying it like between Monday the 24th, which is when I bought it, or the 25th before today, the ex dividend date is supposed to be the 26th, which is tomorrow. And then your sell window is supposed to be um, tomorrow if you sell it, because tomorrow's the 26th. Now, this one is supposed to have 0.45 cents a share, almost 5 cents a share. And depending on your stock price, the yield is close to 20%. And this is a pure yield play. The dividend is enormous at $2.75 to $2.87 a share. But the risks are just as big because PSEC has controversial histories with critics pointing to its management structure. They don't like the management structure. Its share price can be extremely volatile. This is an eyes wide open kind of trade. You got to watch it. only suitable for the most risk tolerant traders, individuals that don't mind having it for 3 days and letting it ride the wave and getting that 20% return. Because imagine 20% return. You bought $10,000 worth of this stock and you got a 20% return this month. $2,000 payoff. You're welcome. Oh, but if you go buy $4,000 worth of gold and hold it for 50 years, you might get $25,000. Ah, I kind of want to hit that $2,000 a month payback on PSEC on 10 bands and have 30 bands at the end of the month. That's just my perspective. I don't know. I like reasonable risk with daily rewards, monthly returns. I'm a gamer. I like to see it happen right now. I don't want to wait until I'm old and gray. I'm too pretty for that. Now, sticking with high monthly high monthly yields, the next one that we have is Orchid Island Capital ticker. Um, this one is a mortgage real estate investment trust or an MREIT. Unlike other REITs we've discussed, the that owns the buildings, MREITs only invest in the mortgage and mortgage-backed securities, MBSs, and they make money on the spread between what they earn and those assets that uh, uh, what the cost of the assets when they borrow the assets. So whatever they're getting from those assets versus what it costs them to borrow money towards the assets. That's what they make their money off of. And this model lets them generate huge yields. And Orchid Island often has a dividend yield well into the double digits as well. And it's mostly invest in agencies and MBS, which are guaranteed by government sponsored entities like Fannie Mae and Freddie Mac, which means this one isn't going anywhere like Bitcoin. This lowers credit risks, but exposes it big time to interest rate risks when the feds stop letting people get loans because the government shut down. So it would be a huge impact in October. I'm in deep on Orchid Island. He said the holidays usually cool the market. I plan on buying aggressive on the lows and then ride the waves, my brother. Hey, I'm in on that too. Is that I'm into Orchid on your suggestion, man. You gotta get in on that. Go check it because if I remember correctly, right now it's about 7.35 a share right now, $7.35 a share. That's cheaper than a pack of cigarettes. So you can buy either three stocks of PSEC, Prospect Capital, or one share of Orchid Island. Prospect Capital would give you at 5 cents a share, you'd be getting 15 cents back for the same price as one share of Orchid Island. That would give you back 12 cents a share, which is inherently 3 cents a share more on the same less than $10 worth of investment opportunity. This is what I be trying to tell you, and these are monthly payers. So technically, you can buy and hold these motherfuckers, and you ain't got to do nothing with them. You can just buy and hold them, and then do a drip, take your dividends, and reinvest them back in as principal, and just watch it grow. But PSCC will grow faster than Orchid Island because Orchid Island has a volatility dip. It goes between 680 and 750, well, 785, and PSCC stays between 283 and 289. It doesn't really hit three and it never hits 270. So you kind of know exactly what you're getting yourself into with these two stocks. And if you have them side by side, you're dealing with, hold on, I got you real quick. I'm going to give you the exacts because I got it written right here. Buy date before December 26th, which is Friday. Ex dividend date is the 29th. No, you buy date the 26th, which is today, or tomorrow, which is the 27th. The ex dividend date is the 29th, which is Saturday. So if you buy in tomorrow, well, buy in either tomorrow, Thursday, or Friday, so that you are on the books before the record date. You sell on the first, which is Monday. That's when you're going to be able to get rid of it because you can't sell on the weekend. You can't sell on Saturday and Sunday. And the 30th is Sunday, December 30th. I mean, November 30th. Now, here, The dividend is 12 cents a share, and this one is often yielding between 18 and 20% range, depending upon the volatility of the value of the stock price. So when you're looking at um, PSCC giving you 20 cents, 20% yield, and Orchid Island giving you 20% yield, together you're averaging a 20% yield on this particular type of stock margin, which again revalidates your ability to invest and make a recurring capital off of holding the stock if you decided to hold the stock. Now, the logic here is the same as PSEC because it's a trade built to capture a giant dividend and then walk on it. The main risk for any MREIT is the interest rate volatility. So when rates swing, the value of our portfolio can change fast. Orchid Island stock price is notoriously jumpy, which means that you can catch a couple spikes throughout the month. And this is another one that's not for the faint of heart. Real quick, he said, I found it goes back to Joseph Kennedy was getting his shoe shine, and the shoe shine boy told him that he needed to buy stocks. He said that was the time I needed to get out, and then the market crashed. So, like he said, when somebody dives into a podcast that's talking about investing in stocks, if you so choose to invest in stocks, and they tell you, oh no, don't listen to that, take off and run. Like Lincoln, as soon as this person says, don't listen, that's when you ignore that guy and start paying attention to ways that you can do your own research and make sure that you know what you're doing and then invest where you think is best. So it took him, hold on, 12:18. He the last time he jumped in here was 12:00. So it took him 6 minutes. No, 12 minutes to find a complaint, not a fact, not a statistic, not an article, even 12 minutes to find something about Joseph Kennedy. Wasn't Kennedy one of the ones that got killed? Mm, maybe Kennedy should have listened. Damn. Now, our last pick that we're going to have in November is going to be a major real estate investment trust, AGNC. This one is one of the ones that we have towards the end of this month that also is a monthly stock. The ticker for this one is AGNC, but it is AGNC Investment Corp. I'm going to give you guys this one as well. Oh man, I love the hecklers. I love the hecklers that are educated hecklers that are actually going to talk sense. So this guy is one of my favorite guys to troll a podcast because at least he's making sense. I don't agree with him saying run away from monthly paying uh, uh, investment opportunities to buy and hold on a growth stock option. I don't believe that that is a smart move. I believe that you should diversify your portfolio and have monthly paying, quarterly paying cash dividend opportunities and still pay the extra money into growth based investment opportunities. I'm saying diversify your portfolio and have all of it, not exclusively just stocks. This guy's saying abandon every opportunity you can have to have a cash paying opportunity and focus solely on growth with the hope potential that that growth actually grows. If it does grow before you buy into it, you missed out on it. But if it doesn't grow before you buy into it, you missed out on it. And you could have been getting paid dividends the whole time where you could have did both. You buy into the stock option, you take your dividends, you take your paycheck, put it on your stock option. You take the dividends, pay your bills. You take the difference after you pay your bills, buy gold, silver, and Bitcoin. Now you've got a system. You're putting away more money than what you spend. You're only taking some of your portfolio's dividends and paying your standard of living, which should be 30% of the income that you make. And then you're taking whatever that you don't need and you're putting it on gold, silver, and Bitcoin. I am not saying don't get Bitcoin. I'm saying don't abandon stocks for Bitcoin. Don't abandon stocks for gold and silver. I'm saying get them all. Now, a logical person would go for the spread. An illogical person would trade one for another. Throw away all your spades for hearts. Not what I would do. He says the market is closed on Thursday. Do you know if it's open on Friday? If it should be closed for, yeah, you're right. That does make a lot of sense. it should be closed for Thanksgiving, because if it's closed for Thanksgiving, then we would have to have it on or before Friday, in order for us to have that stock, because the stock ends on the weekend. Orchid Island ends on the weekend. So it is easier for you to buy in Wednesday morning and have it Wednesday morning. For those of us that are selling PSEC Wednesday morning, if the money doesn't clear until Friday morning, we're not going to be able to buy into Orchid Island. And if we're not able to buy into Orchid Island, then we miss out on whatever we did not have on Orchid Island. But if we can buy in the Orchid Island where the money clears by Friday morning, then we're capable of buying in the Orchid Island, not Monday, Friday morning. Then we're capable of buying in the Orchid Island Friday morning. And if they don't check the books on Friday, if they check the books on Saturday on the ex dividend date, then we should be able to still get the dividends from the stock. Then we sell it on Monday. I can double check. Matter of fact, let's do it right now. Let's go ahead and double check. When is the record date for Orchid Island? Because you can simply ask the Google lady. Now, the record date for Orchid Island is advertised for November 28th. Now, today is November 26th. November 28th is Friday. If you want to be on the record date, you have to buy it on the 26th, which is tomorrow, so that you own it on Thursday, because Thursday is a holiday, and then you will have it for Friday. If you don't have it before Friday, wasting your time buying Orchid Island. So I'm glad that Eric brought that out. Special shout out to him for bringing some logic and reason to our overall discussion today. Even if it's open on Friday, it's not going to matter for the Orchid Island stock, because you have to buy it on Wednesday and own it by 4 p.m. Eastern Standard Time on Wednesday, so that you're on the books for the record date on Thursday. That's what we have to recognize. Now, Orchid Island is, wait, we already covered. No, this is AGNC. AGNC is one of the largest, best known mortgage real estate investment trusts out there, just like Orchid Island. It's primarily invest in agency backed residential MBS, but its sheer size gives it some advantages, way more stable than Orchid Island. AGNC, higher cost. I think it's almost $9 a share, $9 or $10 a share, 9.85, something like that. Also is going to pay monthly and has a long history of high yields, still also paying 12 cents a share. It offers a chance to grab a large dividend right at the end of the year. Since it is in the same business as Orchid Island, it has many of the same traits: high yields, monthly payments, and high sensitivity with the Federal Reserve doing its thing. We're going to want to buy this one before the 29th, which means we could potentially pick it up on Friday, AGNC. So knowing that, probably will grab AGNC instead of grabbing Orchid Island, since I can sell PSEC and have money clear by Friday. I won't be able to get Orchid Island, but I might be able to get AGNC. The ex dividend date is on the 30th, which is Sunday. The sell date is going to be Monday, the 31st or the 1st. The dividend for this one, like I told you before, is 12 cents a share, but this one is typically going to give you 13 to 15% range instead of the 18 to 20% range that you get from PSEC and Orchid Island. AGNC is attractive because it's highly liquid and seen as a bellwether for the whole MREIT sector. It's easy to get in and out of that trade. The risk profile is nearly identical to Orchid Island, but it's still a little bit more stable. And it all comes down to the interest rates. Any surprise moves from the Fed can cause sharp swings in this particular stock's price. He said, in on AGNC, too, it's been pretty good, man, like up 12% for the year. Exactly. Exactly. I got a lot of these stocks. That's why I tell y'all about them. I know from experience. I'm like that call girl that tells you not to stand on a block too long because you'll get got. Because I've been out here making it do what it do for a long time. I can tell you from experience. Now we're halfway through the calendar, and we've covered 8 different opportunities for both November, and some of these also work for December as well. And from a broader market of ETFs up to some ultra high yield monthly payers, 7 stocks up for January are coming through because we covered some of the ones that are that are going to walk through the end of November, but almost on the exact same date. Those monthly payers are going to be covering for December as well. So we're going to be recapping some of these on the last week of December because some of these are going to be running the same thing as monthly payers. These ones that we're going to be talking about for January are going to be representing the first income waves of the new year. So if you're finding these kinds of details actionable, breakdown, valuable, do me a huge justice, mash those reaction buttons, hit that like button, subscribe to the channel if you haven't done so already. Take time to share it with somebody that you know could benefit from this and hit those notification bells because I will be releasing the calendar for February, January, March. I'm going to be updating you on the ex dividend dates. I'm going to be updating you on the values. I'm going to do better about updating the stock values on the show so that when you see it on the 16 by 9 and 9 by 16, you'll see what I got going on here and you'll be able to follow along with this. And I will remind you of when is a good time to buy it and then sell it so that you catch before the ex dividend date and run after the ex dividend date on to the next paying stock. And I want to make sure that you guys follow along so that you guys don't miss out. So go ahead and click that subscribe button, turn on your notifications, and mash those reaction buttons throughout tonight's show. Even if you're on Twitter or Twitch, you can follow and like button over there as well. So let's jump into our January opportunities. Uh-oh, we got a question. What do you think about Trump's idea on 50-year mortgages? Fuck yeah. Yes. Yes. I didn't even hear about that. I'm glad you mentioned that. Yes. Yes. Let's take a side turn real quick and talk about a 50-year mortgage. 30-year mortgages fucking suck. A 30-year mortgage going to require you to put almost 20% down in some states, and then you're going to be paying high notes. The interest rates are going to be higher, and then you're going to be in a situation where um, you're going to have to run this for like 30 years. If you have a 50-year mortgage, think about this. Let me do some calculate. Well, no, I'm not going to worry about that. I'm just going to give you some hypotheticals. A $250,000 house, yeah, roughly between 150 $250,000 houses. $250,000 house might run you close to $2,000 or $2,500 a month mortgage, especially if you do zero down. If you find a way to get you into a zero down payment, something to that effect, for 30 years. A 40-year mortgage for that same house would they're going to make more money in interest over time, but your monthly payments would be far less. That same $2,000 mortgage that you might be struggling on might be like 1,500 or 1,100. Take $150,000 house for example. $150,000 house. Uh, if you did like a zero down option and ran 30 years, you'd be paying about $1,100 a month with taxes. And some companies, especially if it's an FDA loan, are going to be requiring you to have property insurance on it. Now, let's take that same dynamic, that same $150,000 house, put it on a 40-year mortgage. You'd be paying 900. Yeah, it's 40 years, but you'd be paying 900. 50 years, 50-year mortgage, you'd be paying like 750 for that $150,000 house, which is cheaper than renting a studio apartment. You'd be able to buy a whole house, 2,000 square foot, anywhere between a quarter acre piece of property and as much as like 10 acres, depending on where you're buying a house at. And you'd be paying $750 a month. So, fuck yeah, 50-year mortgage. Now, when you start thinking about the difference between paying $150,000 with interest for the idea of paying potentially 250 to $300,000 over the course of 30 years versus paying that $150,000 house costing you upward of $450,000 over the course of 50 years, you don't have to pay the minimum amount on the loan. But if you get a 50-year mortgage on a house that requires you to only put up $600 a month for the mortgage, and you put up $1,200 a month on the mortgage, you're putting more on the principal. If you're currently renting a house right now from a landlord that don't want to fix your dishwasher, and you're paying $2,000 a month for that four-bedroom apartment, you could put $2,000 a month towards that $650 a month mortgage so that you can overpay on your house, where all of the money that's going towards your mortgage is a tax deduction, and you can pay the house off sooner. You could still pay the house off inside of 15 to 18 years, but having a 50-year mortgage, if some shit hits the fan and you're doing balloon payments where you're putting down $2,000 a month for the first 10 years, you're probably only going to owe them $250 a month when shit do hit the fan. I can give you $250 a month this month. I could give you $250 a month for 6 months and still not be negatively impacting the overall cost of my loan. Because as you overpay on your loan, they're going to reassess your payments and lower your payments because you've taken a big hit towards your premium. Every 6 months to a year, if you're supposed to pay $600 and you're paying $1,400 a month more than that for 12 months, they're going to drop your premiums next month. I mean next year. And if you're doing that for 5 years, they're going to drop your premiums. At some point, you're going to go from owing them $600 a month to only owing them $100 a month. Most people spend more money in a strip club than what you would be paying for your house when you only owe the government $100 a month for the next 30 years. It's easy to will your house to your kid with $100 a month mortgage left on that bad boy for 50 years. Yeah, 50-year mortgage. See, that's why I say I can't talk no shit about Donald Trump. He got a mouth on him, but at least he be doing shit that broke folks can benefit from. He says, so if you're listening to this, you're a great person. Thank you very much. And your friends and family know it too. Of course they do. They know I'm the best thing since sliced bread. I am that damn good. The most electrifying person in podcasting today. Is I know you're going to make a big change in this world in the future. So keep doing what you're doing. Special shout out to Jaman. Elijah, man. I really appreciate you, brother. Is they love you too, man, can pick up a couple of properties to rent and generate some cash flow. Now that is a man that's thinking smart. I love when you think like a billionaire. Hashtag Michael said it. I love when you're thinking like a billionaire. 50-year mortgages, you pick up 48 houses and then you leverage the houses in order to buy you two apartment complexes. 50-year mortgages, $600 a month mortgage, and they're paying $1,500 a month rent. You're cheaper than everybody else in the neighborhood, and you made $900 a month profit, $700 a month profit, because you're going to pay $100 a month for the property manager and you're going to put $100 a month aside to do maintenance. And now you're good. See what I'm trying to tell you? I'm trying to tell you. People don't think. They just go buy Bitcoin. All right. Now, kicking off January is going to be AG Mortgage Investment Trust, ticker MITT. That's going to be the next one that we're going to be doing. And this is another MREIT, but this one's got a twist because unlike AGNC and Orchid Island, which sticks mostly to agency backed securities, MITT runs on a hybrid model. It holds both agency MBSs and a good chunk of non agency mortgages. This credit sensitive strategy means that MITT takes on more risk that borrowers might default, but it does so for a short at higher yields. This can be a great strategy in a strong a strong economy, sorry, but adds another layer of risk on top of the usual interest rate sensitivity that they have going on. So this one has an estimated buy date in December around about the 30th. And we're going to double check this in December because it might be sooner than that. The ex dividend date is supposed to be around December 30th. We're going to double check that to be sure about it. But AG Mortgage definitely is an end of the month stock option, and it does pay more than AG&C and Orchid Island combined. The ex dividend date is supposed to be on the 21st, and your sell window should be around January 1st or 2nd. The market is closed on the 1st because of the holiday, so around the 2nd should be when you should be able to sell. This one is a quarterly, unlike Orchid Island and AG&C that are monthlies, and this one will project about 18 to 20 cents per share, which is often around about 10 to 12%. But because you're only going to hold it for a few days, that 18 to 20 cents a share is way higher at what I think that one is about $12 a share for the stock to buy it. It's a few dollars higher than if I remember correctly, I think it's $12. It could be higher than that. Let me double check that because I like to be more accurate than assuming. Um, but I believe that AG Mortgage is um, around $12. Hold on, let me double check. AG Mortgage. See, we got we got these. Well, it is a well, no, not AGNC. What is it? MITT? No, so I'm supposed to be looking for MITT. I'm looking for AG Mortgage. I'm trying to put in AG Mortgage for the MITT. No, it's better than that. It's $8.09 a share. So see, that's why I'm glad I checked it before I told you about it. $8.09 a share, which is cheaper than AG Mortgage and a little bit more than Orchid Island, but it is giving you, I can verify it right now, 21 cents a share is what it's saying right now at the moment with a 10.66% dividend yield. So I'm looking at it right now. And this one is going to be for the quarter. So it is going to give you more than the 12 cents a share that you would get from Orchid Island or AGNC. He said can actually achieve generational wealth. Fuck yeah, you're gonna. This is what I'm telling y'all about doing. So the stuff that I tell y'all about doing is to do two things: build you a legitimate retirement opportunity where you don't have to work anymore. You can quit the job that you hate, spend more time with your friends and family, and then you can build generational wealth. You can build yourself a trust and then start putting everything in the trust and then have the trust assign beneficiaries. And when the beneficiaries start getting what you have to give them, you don't have to deal with probate, so you can avoid probate tax when your kids don't got to pay taxes on the money that you left behind. I had an insurance agent tell me, "Oh yeah, I've got life insurance so that I can cover the spread on my estate if I die before stuff get paid off, blah blah blah." And then, it's tax free. It's tax free, bro. It is tax free as a life insurance policy that pays the beneficiary directly. But when your life insurance policy pays for your estate, whatever's left over is part of the estate and it's going to be included in the estate tax. If you die and I get money just because you dead, got nothing to do with your estate, yeah, that's going to be tax exempt. But when your life insurance policy covers the spread on your estate, that is going to be part of probate, and that's going to be part of the estate tax, and somebody's going to pay on some of that. It ain't all free when you go down that way. Yeah, he said looking good, and so is the stock. It's $8.09. This is what I told you. Most of the stocks going across the bottom of the screen are less than $10, less than $25 a share. They got a lot of them up there that's more than $25 a share, and some of the more popular ones like Johnson and Johnson, Shell, Chevron, Oracle, um, um, Tesla are over $100 a share. You got Cord in there that's like 100 to 110 dollars, and then you had RM and REM that are like 70 and $80 a share. But the majority of the core satellite portfolio are all stocks that are under $25 a share, and most stocks that are under $10 a share are called penny stocks. So when I come and tell you about, hey, look at these undervalued stocks that's paying me a whole bunch of fucking money. Hey, they ain't got to run up on it, up 21% for the year. That's what I'm trying to tell you. That's what I'm trying to tell you. So next month, at the end of the month, if you pick up AGNC or MITT, you pick that up before the ex dividend date, get that payout. If you got to change from getting Orchid Island or PSCC or AGNC, if you get that and then go and buy AG Mortgage instead, you're going to get more money that month during that time frame than what you would from the other two stocks. You can spread your portfolio around, and instead of putting all your money into one stock for 3 days, you can spread it around and hold and have between 5 and 20% on each one of your stocks, depending on how many stocks you have. You can spread and get from all of them and take the average. The more stocks that you have that average less than 15%, the lower your overall portfolio's percentage yield is going to be year to year if you're doing a buy and hold for the whole year. But we're talking about the dividend rotation strategy where we're going to buy that stock. The last time we owned that stock was the last time it paid a dividend. And the next time we own the stock is going to be the next time it pays a dividend. That's what I'm talking about. So I'm not trying to have it when it's not paying me no money. I'm trying to have it when it's paying me some money. And then we just got to work out the taxation. So our 10th stock out of 15 stocks that we're covering today is Stag. Stag Industrial has a ticker of STAG. This one's actually pretty interesting. This one's also a real estate investment trust, focuses on a really important niche, single tenant industrial properties, mostly warehouses and distribution centers. It's basically the backbone of e commerce. Stag has built a diversified portfolio across the United States, and like Realty Income, it pays a monthly dividend, making it a constant and attractive candidate for our calendar. This one is in real estate investment trust. The estimated buy date right now is expected to be about Thursday, January 15th. The estimated sell date, the ex dividend date, is going to be the 16th. Our payout date is expected to be early February. This one being a monthly dividend around 12 cents to 13 cents a share for a yield of about 4 to 5 cents based on the value of the stock, makes this the part of the list become a combination of stability for the industrial sector with that monthly dividend. Demand for warehouses has become very strong thanks to online shopping and drop shipping rises. The main risk would be a brand or a broader economic slowdown that hurts demand for industrial space, like when the tariffs started fucking everybody over. But its diversified portfolio makes it a solid defense choice for a capture play. Next is Gladstone Commercial. I love this one's ticker because it is good. They made their ticker good. You got to buy into the good one. And this one is also a real estate investment trust, but it owns a mix of both industrial and office properties. The appeal here is its high yield and monthly payout. Good often offers a much higher yield than the blue chip companies like Stag, but that higher yield comes with a different risk. Its portfolio includes office properties which have obviously faced major challenges in the work from home era. Now, this one being a real estate investment trust, should have a estimated uh, buy date of January 20th, estimated ex dividend date the 21st, with a sell date on the 21st, payout date on the 31st. A monthly dividend around 10 cents a share for this one, for a yield of about 8 to 10% range. And we're including good as a higher yield monthly alternative in the real estate investment trust space. A big dividend provides a nice buffer for the trades, and the risk is still going to be just as obvious because its exposure to the office market is a major concern since everybody's starting to do um, remote work. And I even promote remote work on my podcast because I would prefer to have the freedom to get paid from wherever I am if I'm going to work doing something, as opposed to having to show up to a specific location to get paid. As long as I'm getting paid for my presence, I would prefer to get paid to do this podcast from anywhere in the world instead of only getting paid from this chair. Just haven't found a place that I would like to go as of yet. Now, this trade is a bet that the market has already priced in the risk, and the high dividend is enough compensation to offset that risk. It's more speculative than stag. Now, back to the MREIT sector. With our 12th out of 15 picks, Ellington Residential Market is also another real estate investment trust, ticker EARN. Y'all earning some cash by putting your money somewhere and letting it sit. Like AGNC, it mostly invests in agency-backed MBS companies, but its management team is known for its sophisticated approach to hedging against interest rate risks. The company pays monthly and, like its peers, offers a very high yield. It's another chance in late January to capture a double-digit yield from a mortgage sector. The buy-in date is expected to be around the 27th of January. The ex-dividend date is expected to be around the 28th. And the sell window is expected to be around the 28th as well. Payout date is going to be in February of 26. The monthly dividend around 8 cents a share for yield in the 12 to 14% range. A logic for earn is the same as for the other M REITs, a massive dividend providing a cushion. The risks are also the same. The stock is highly sensitive to the Fed's policy changes and the bond market as well. So this is a trade for those who are comfortable with high volatility and are watching macroeconomic news closely, which is what we do on this podcast every week. Our 13th pick is a familiar face because, again, we're going back to that prospect capital because it happens every month. This is going to make its second appearance as that monthly payer, giving us 12 chances a year to hit this one. So on January, you want to set it up just as you did in December, just as you're doing this month. The highlights is a key idea for the dividend capture. When you find a liquid high yield monthly payer, it can become a reoccurring part of your strategy. In fact, a reoccurring part of your strategy that might make you buy and hold it with a percentage of your dividend trust capital, and then you're going to be able to rotate out all the rest of them. Where you might find yourself holding 40% of PSCC and trading around the other 60%. You don't have to find new stocks every single month because I found almost 50 of them right down here if you're watching it on 16 by 9 and right up here if you're watching it on 9 by 16. You don't have to look anymore. You can just research the ones that I'm putting up there and be like, dang, these ones pay. The trick is to reevaluate the risk before each time you invest into it. If you hold it, you just want to watch the fluctuations. And then if you see a spike throughout the month, you might want to sell the difference, especially if you're working with ETFs. And then when you see the dip, you might want to buy back in with the same amount, which means that in your portfolio, you may have a level of capital that is not doing anything, waiting on that dip opportunity to reinvest in. Now, this one's going to have the estimated buy date of January 28th, should have the ex dividend date around the 29th, sell date around the 29th. Estimated payout sometime mid February. Again, going to have a 0.45%, 0.45 cents a share payout for the same exceptionally high yield. And the reason it's backed is because it is consistency for our opportunity. The risks haven't changed. High leverage and volatility still going to be there, but the chance to capture the dividend twice this big every single month is highly rare because there's really only 3 or 4 of them on the portfolio that I know of that are doing 20% every month. It remains a trade for those with that high tolerance for risk. I love high tolerant risk. Just like that, our next pick, we're going to have our 14th one. Again, is going to be Orchid Island because Orchid Island is a monthly payer. By late January, the market will have had a full digest of the Fed's end of year comments And round about that time, we should be experiencing our full on next shutdown. This price action for Emery's, like Orchid Island, will be driven by the market thanks to its incoming interest rates for next year and its dip in income levels for next year going into February. So we might see a good January bid and then a bad February bid because everybody's going to be ass in the air because of the second crash. This makes January trade a bit different from the December trade because we have stability. Remember, Orchid Island is a real estate investment trust, and when tenants don't pay, when mortgages don't pay, the trust hurts. And when the trust hurts, the shareholders hurt. So when the feds don't get paid, when the government agents don't get paid and they don't pay their bills and they are customers of the properties that are owned by the real estate investment trust, the shareholders don't get paid, which makes us not get paid. Trickle down effect. Now, this one is going to be another one that's going to be about the 29th. It's going to also have an ex dividend date. So you're buying it around the 29th and then having an ex dividend date on the 30th, sell window on the 30th as well. And your estimated payout date for that one is also going to be early February. Now, because some of these stocks are going to be on the same day or next to one another in dates, you might have to split your investment opportunity in order to capture both of them or decide which one you're going to go all in on. The difference between PSEC and Orchid Island is that PSEC is more stable and costs less, even though it has less per share. The share value is so cheap that you're ending up making more off of the same $8 worth of PSEC that you would get off of the same $8 of Orchid Island. So if you're looking for a higher dividend by buying more shares, go with PSEC. You can go with Orchid Island over AGNC if you're looking for volatility because Orchid Island is cheaper than AGNC. Orchid Island is around 735, PSEC is around 1087, and AGNC is around $8, $8 or $9. As you see the stair stepper, Orchid Island and AGNC are both 12 cents a share, and PSEC is 5 cents a share. But you could potentially at less than $3 a share buy three or four shares of PSEC for the same price as AGNC. So even at 5 cents a share, you could get between 15 and 20 cents off of the same $10, same 10 or $12, as opposed to only getting 12 cents off of one share of Orchid Island or one share of AGNC. So this is how we decide: do we split? Do we go all in on one, or do we go all in on the other? That's what you have to decide. So when the gentleman came back and said, oh yeah, run. Don't listen to him. Run. I'm sitting over here looking. Hey, I'm giving you all the information that you need to be successful. You are going to decide what you're going to do with the knowledge. Now, we understand that Orchid Island, still 12 cents a share, 18 to 20% yield. The logic behind going after this one again is that we're returning to a reliable high yield source. And again, what I told you, when you're looking at these monthly payers, you might decide to say, fuck it, I'm going to put like 20% down on PSEC and 20% down on Orchid Island, or 50% down on PSEC, 20% down on Orchid Island, 5% down on AGNC, and then dividend rotation around the other 25%. Hey, it is what it is. It is what it is. If you aim for more volatility and you're going to get larger dividend payouts back, and then you use those dividends to pay into the lower quantity of shares to offset the balance where you're increasing your down shares, bringing your balance out to an even 5 to 20%, roughly 10% on all of your shares. Do that. Do that. Aim for more and take the dividends and put it in the rest. Matter of fact, you can put all your money into PSEC, take the dividends, put all the dividends into Orchid Island, take the dividends out of Orchid Island, put all of them into AGNC if that's what you wanted to do. The most volatile, highest paying ones give you the most money to put into the next one and just do a trickle down effect. Or you could just buy $1,000 of each one or $10,000 of each one, and then as they fluctuate, shave a little off the top, put a little bit back. The risk is going to remain centered on the interest rates and volatility. And if the market starts pricing in a surprising hike, Orchid stock could get hit hard. So you know that if you put all of it on Orchid Island, is probably more volatile than PSCC and way more volatile than AGNC. So it could go from almost $8 all the way back down to 6.85 or 6.79. You can see that. AGNC kind of stays consistent. PSCC kind of stays consistent. Only has like a 5 or 7% variation more often than not. But Orchid Island typically sees like a 20-cent variation. So you got to be careful with that. Sometimes a 75-cent variation. But that extra volatility would be key for you if you were trying to do a buy and hold and then shave off the top when it peaks and then buy back in when it dips throughout the month, increasing the quantity of value on that particular type of stock. This trade is a direct play on that short-term rate expectation. And to round out the 15th stock of the month is going to be our AGNC investment core. So this trio of high yield monthlies, PSCC, Orchid Island, and AGNC, are going to end up being a core to the calendar. It is part of our core satellite platform. So you got to go see the show for that one because it gives you a list of all of the ones that you want to buy and hold. And then the rest of them, you're going to trade out quarterlies. Their schedules are very predictable and they're liquid. So their yields are massive. You're capable of holding it today, getting rid of it tomorrow, and not having any issues. A January capture for AGNC will be driven by the same forces as Orchid Island and Earn as the biggest and most liquid agencies in the MREIT area. And its price against the action is a good proximity for the whole sector. The buy day for this one, again, is going to be around the 29th. You're going to have an ex-dividend date around the 30th. You're going to have a sell window around the 30th. And your estimated payout is going to be around mid-February. You're going to get paid for Orchid Island before you get paid for AGNC. You're going to get paid for AGNC probably before you get paid for PSCC, but you're still going to get paid. I am in November getting dividends from October. That's what's going on. Okay. Now I told you, AGNC is a 12%er. It's going to have 13 to 15% classic. And the rationale is going to be clear with this one because it is the third of a cluster of the high yield plays, and it is at the end of the month. So this allows a trader to potentially roll capital from one capture to the next. The risk is concentration because if something bad happens to the MREIT sector at the end of January, all three trades could go wrong at the same time. This highlights the need for careful risk management and the ability to diversify the portfolio out of the MREIT sector to make sure that your total portfolio is covered for any potential dips. But for a trader trying to maximize opportunities, this end of January cluster is the target rich environment. He says, I'm going to pick some up when the market opens. Shit, you need to grab all of the tickers from below. Take the time to look at the values of each one of the tickers, scroll through the history over the past 3 to 6 months, see what's going on each one of the ones that are down below if you're looking at it from a 16:9. If you're looking at it from 9:16, they're scrolling across the top of the screen. Just grab those tickers off of the show and take a look at each one of those tickers from off of the show. My recommendation, buy 5 or 10 different of the cheapest ones that I got up there because those are going to be dividend payers, and then decide whether you're going to roll through them or you're going to hold on to them. Get the dividends off of them, and then use the dividends to go buy the more expensive dividend payer ones, and then hold on to the higher value ones for growth stocks because gas and oil, good to diversify into, but they cost more per share, well over $125, $130 a share. Johnson and Johnson, good to get into, over $150 a share. Coca-Cola, Pepsi, good to get into, but over $175 a share. Tesla, good to get into, over $450 a share. Oracle, before TikTok gets bought and sold in December, if it does get bought and sold in December, Getting into it at 270 something dollars a share. It's good to get into it before the thing hits, but the problem that you have is that you have to get it now while it is affordable instead of listening to the other gentleman earlier tonight who said sell it all and wait until the dip. No, you want to get it now, hold it, and when the dip happens, get more. Don't run from it, get more. It says, do you have any leads on any rare earth stocks? In my rare earth show, I listed all of the precious minerals that you can invest in. And those precious minerals are still highly valuable. All of the ones that are leading into um, technology, all of the ones that are leading into green energy, all of the ones that are being utilized for AI, um, the stuff that's being utilized for cell phone generation, chip creation, and all this stuff. I listed in because I covered several months ago precious metals a week after I covered gold, silver, and platinum and uranium and all of this other stuff. So I've covered it, and I do have one of my shows. I think you just got to go into my channel on YouTube and type in precious minerals or precious metals, and one of two shows should pop up because one Tuesday I covered gold and silver and platinum, and the other one I covered uranium, lithium, and all of these other things that are highly sought after in different countries around the world, which leads to some of the other countries that I talked to you guys about that don't just have real estate and oil; they have precious minerals that you can scrape off the coast. Places like Ukraine have precious minerals that if you don't bomb them with nukes, they would be highly sought after if you can dig them up before they get blown up. So there goes political impacts that impacts investing. I also gave you information on those shows as to which ETFs that you can invest into so that you don't have to buy the actual mineral. You can just buy the value of the mineral against the ETF value of the mineral so that your capital is there gaining you value, and then you can just sell it whenever you need to. I also tell people instead of buying gold bricks to go buy silver doubloons. Silver doubloons. That's the best ones to get into because those are able, if you've got the doubloons, when the market crash, the value of silver is easy to take a coin and hey, this is $25. Boom. What is the deal with BBAI? It's a short, isn't it? BBAI is last time I looked at it was around $7.75 a share. It is a new tech company that's coming out that's fast marketing into AI. And it is again under $10 a share. It's a growth stock, and it is the type of stock that is in tech that could potentially have massive gains. It is an undervalued stock because it is fairly new in comparison to Tesla, but it is still a very stable stock to get into. Um, but it's not a dividend paying stock. One of the reasons why BBAI was put into the core satellite portfolio was because people who want to invest in growth as well as dividends would, for under $25 a share, were asking for different growth stocks that they could buy into. Because again, when we're not talking about billion-dollar investors, we're talking about the average 50 to $75,000 American. We're talking about the average under $100,000 a year American is probably going to be better off trying to invest in stocks that are under $75 or under $25 a share in order to get started investing. And in doing so, I found all of the best stocks that you can get yourself into at under $25 a share. Now, BBAI might be short today, and the reason why it would be short today is because some of the changes that happened with AI policies and the stuff that was dealing with the big companies that I talked about with, I think yesterday, with all of the people getting fired in AI industries. But BBAI is likely to see a massive upswing coming soon. Now, I told you go and grab the cash paying stocks. BBAI is not a cash paying stock. You can grab BBAI for growth, but I am recommending that any person that is trying to maximize gains on their platform to put more effort into their cash generating stocks so that in a financial concern, they don't have to sell the stocks. They can just stop reinvesting the dividends and live off of the dividends as an emergency fund. It's not beneficial to only have that as an emergency fund. But if you had $10,000 or $20,000 in a savings account as an emergency fund, and you had $2,000 or $3,000 a month coming to you from a dividend paying platform, then you would have $6,000 to $12,000 that would hold you over for 2 to 3 months. And the monthly reoccurring dividends paying from your stock portfolio would give you a larger blanket between going bankrupt and going back to work if a government shutdown lasted 90 days. So I'm advising people to aim towards having a 100% dividend paying stock first and then expand into growth stocks after when they have a sufficient quantity of dividends that satisfies offsetting their primary income. Once you have more money coming in from your portfolio, then you make off of your job, you can diversify into growth stocks. But growth stocks do not pay you money. And when you need money, you sell all of your assets in order to get money. And to prevent you from selling your assets, I'm telling you to buy something that will pay you to hold on to it so that if you need money, it's going to come anyway. That's the idea. So the broke man mentality doesn't trigger you to say, fuck, I got to sell all my stocks because I lost my job today. It's like, nah, just pay your bills for the next 2 months and then take the dividends and deposit them into your bank account. It typically clears the bank within 2 to 3 business days. So if I sell tomorrow, it'll hit the thing on Friday and I drop it by next week, Wednesday, I got the cash. That's not something that a lot of people think about. But with gold and silver, you got to put it up for sale. You got to wait till it's sold. And then after it's sold, because it is not liquid, after it's sold, then the money's got to clear. Then you got to drop it into your account. And then it's 3 days to clear the account. That might take you 2 weeks to get rid of gold. But I can get rid of my stock tonight and have the money by Wednesday at the latest, including holiday delay. So whatever emergency that I could potentially come across this week, if it can wait until Thursday, I'm good. But if you had $40,000 worth of gold, it might take you till the middle of January to get the money. That's the difference. The accessibility to your assets, the liquidatable portion of your assets. That is the most important part of survival when you lost your job. So that's why we had BBAI in there. BBAI is a growth stock. BBAI is not a cash generating stock. Um, Netflix should be in there, but Netflix is a growth stock as well. Netflix made a massive increase over the past year, and with a lot more people switching from cable to Netflix, Netflix is going to grow as well. I talked to you guys about the WWE being owned by TKO. It does not have as big of a dividend payout, but the WWE is a dividend paying stock. It's just an expensive dividend paying stock. So if you wanted to invest in shares in your favorite wrestler's job, there you go. That's where you put your money. Here we go. What about Wendy's? Some companies can be private shareholders, meaning that it's not a publicly traded. So only the people inside of the company can invest in the stock, like Waffle House. And in those types of scenarios, you cannot readily publicly trade against them. But if there is a ticker for Wendy's and you decide to invest in restaurants, you have to understand that when people stop making money, people stop spending money. And when people stop spending money, fast food stops making money. So recognizing that the holidays were bouncing back off of people losing their jobs, everybody's trying to have Thanksgiving on Thursday, and a lot more people are trying to have Christmas in a few weeks. We're going to have less business in restaurants coming up. Yeah, we're still going to have business because people don't like to cook. We're going to have less business in restaurants coming up, and we're going to have more business after the second or the third, when people actually probably the third, because people are typically hung over for 2 days after New Year's Eve, and most restaurants don't have that much business on the first. So probably the third, the restaurants will start bouncing back. Well, that's an interesting question. Questions and comments from the fans with random questions across the board are questions that you can ask on Sunday. Today we're actually talking about financial investments, and questions related to money would be more appropriate for today's show. So this would be an inappropriate question. Um, you're asking me if I have any advice for someone suffering from lingma. The only thing I can tell you is if you stay strong and keep going to whatever treatment that you have to go through in order to stay alive because living is worth it, no matter how much it hurts. And then you got blocked. No matter how much it hurts, whatever medical treatment that you have, you can stay on that treatment to the best of your ability because living is worth it no matter how much it hurts. And you never know, things might work out in your favor, but it doesn't always happen that way. Sometimes when you have life threatening diseases or life ending diseases, you just got to ride the wave until the wave ends. But with so many cures that are coming out for so many things and so many new invasive treatments that are coming out in so many different ways, it makes more sense for you to try and fight to survive than it is for you to give up because you never know. You might be the one that becomes a miracle patient that flagships cures for everybody else, but you won't be that miracle patient if you give up. So even though that guy was uh, performing a prank specifically, if you got something and it hurts, ride that wave and stick with it because living is worth living, no matter how much it hurts. Whether it's psychological pain, emotional pain, or physical pain, living is worth living. The good times and the bad. We recognize the good times because of the bad times. Without bad times, we wouldn't know what good times would be. If we had a life of just good times, it would just be normal. But we can differentiate that we are having better days today because we remember the suffering from before. They play into one another. So, that's the list that I got for you guys for December and January. Your dividend capture calendar for December 2025 and January 26th. In December, we're going to have Main Street Capital, Schwab US Large Cap ETF, uh, Ultra Excess Property Trust, Realty Income, and the high yield trio of Prospect Capital, Orchid Island, and AGNC. January, we're going to have AG Mortgage, Stag Industrial, Gladstone Capital, Ellington Residential, and then returning back to our monthly trio of PSCC, Orchid Island, and AGNC. Now, I have to end with a very important disclaimer because this is for primarily educational purposes and for informational purposes only in order to get you guys the ability to do your own research and find out what you are going to do for yourselves. It is not specifically financial advice. Uh, this dividend capture strategy is an advanced technique with significant risks. Stock values can fall, and they have changed since I posted these stock values up here. So while some of the stock values that you're seeing might be similar to the stock values that exist currently today. Some of the stock values that you see are completely different than the ones that are up there. So go back and double check the stocks to make sure that the values are what you want them to be before you buy into them. Check and make sure the trends. Check and make sure that you have the risk tolerance to invest in them. Make sure you find the ex dividend date and make sure you find the record date because you don't want to buy it and miss the record date. There are no guarantees the stock prices will recover after an ex dividend date, but they can. Trading costs and taxes will eat into the return as well as any errors in judgment that you make by trading late. So you absolutely must do your own research before making any trades. This strategy is only for experienced traders who understand and accept the risks. So please talk to a qualified financial advisor to see if this type of trading is right for you, or do your own research and see if you feel confident. What do I think of Master? I think that it is an undervalued stock that is going to be good for your ability to maintain your core satellite portfolio. That's one of the reasons why I put it into the stock. Off the top of my head, I can't remember just looking at the ticker if that one specifically is a dividend paying stock. I like to be honest with you guys because there's over 50 of them up there or close to 50 of them up there. So micro strategy, not a dividend paying stock. It's a growth stock. One of the reasons why I didn't remember it, $172. This stock was one of the stocks that I had grabbed when I covered the show for the growth only stock versus the week before when I did the balance stock with the core satellite strategy, and the week before that when I did the dividend only portfolio. So I have done a video to promote a growth only portfolio, a balanced portfolio, and a dividend only portfolio. And then I did a core satellite portfolio that gave you the a little bit of everything. And then I gave you a portfolio that utilizes the core satellite strategy, which is buying and holding all of the best, lowest costing, highest dividend paying stocks, and then doing dividend rotation on top of that. So now you got like five or seven strategies that you can use if you're going to buy into them. He said Masters hasn't produced for me yet. Well, it's not supposed to provide money. It is supposed to be. It's a growth stock, but it's been on a decline since October of 2005. And the last time I covered that stock was before October of 2005 because it's a growth stock. But this one is a software platform, and we were covering software platforms. And this company is engaged in the design, development, marketing, and sales of the software platforms through licensing arrangements. It's a cloud based subscription, which means that when we start having explosions in cloud based products, this company is going to bounce back on them, just like Oracle. And it's focused on providing enterprise customers with software platforms and services for deploying intelligence applications. Its platform is going to be uh, consolidating analytics and mobility in a single platform, available both as a premium, but this is premium software and as a hosted service offering the cloud strategy. It's a micro strategy that's going to be offering, and it's going to be let's see, consisting of micro strategy analytics, micro strategy mobile, and ushers. So it's not that's not something that is really booming since October when the shutdown happened, because a lot of the stuff that have been running on that would probably been government funded contracts, and the shutdown happened on the first and started negatively impacting stuff uh on the 6th, on the 8th, and it's been down ever since. We just came back off of the shutdown like last week Friday, if I remember correctly. So we haven't been off the shutdown too long. it's it hasn't been like 2 weeks since we've come back off the shutdown, so it's not going to go back up quite well. But it again, I don't do growth stocks because a growth stock that your money is based on the value of the stock. A dividend paying stock is going to pay you the same amount of money unless they slash the dividend value. They're going to pay you the same amount of money every month, no matter if your stock is $7 or $70. But if your stock was $7 when you bought in and it went to $70, you have a massive growth. But if it was $7 and it went down to $6 and you buy into it, then it goes up to $10, you've experienced growth and you're still getting the same quantity of dividends every month. It scares people more to have a growth stock that doesn't pay dividends to lose $150 in value. It does not scare a dividend capture person or a dividend exclusive portfolio to see a $150 dip in the shares when you have the capabilities of buying into it, knowing that it's going to go back up. These are blue chip companies. All of them are blue chip companies, meaning that I don't remember any of the companies that I found that is less than 10 years old, less than 15 years old. I could be wrong. BBAI could be it, but that's a growth stock. The dividend paying stocks are all blue chip stocks, 25 years in the making, and they're going to be around for a while. So again, when you ask me, what do I recommend out of the list that I gave you? I said explicitly go after all of the lowest costing, highest paying dividends first. Grab the 15 cheapest ones that are paying dividends. Use those and then take the dividends and go and buy some more. You can have up to about 20. And then after that, you start hedging the difference of your interest rates because you can diversify enough off of 20 different stocks and be good. Or you can get like 30, 40, 50, but you start getting into a S&P 500 level when you start doing more than 20, 25 stocks. So like I said, grab the 15 cheapest ones that have the highest paying dividends in them, hold them if you want to hold them, and then take the dividends from them. And if you want to buy five more that are growth stocks that you're interested in, go buy those using the dividends from your principal. And then as you get growth on your growth stocks, you can hedge them if you want to and buy into your ex dividends or not. You can hold whatever you think is best. Now, when you start leveraging your portfolio, you want to buy and hold your portfolio and leverage your portfolio for capital from a line of credit, a lien against your stocks. And you want to use that capital to buy assets like owning a car cash up front instead of financing it, owning a house cash up front instead of mortgaging it, and then taking the dividends, which is why it's important that you build the dividend value first, take the dividend and pay the monthly premium on the line of credit where your stock portfolio is paying the loan. The loan bought you the asset. You've got the asset free and clear. The cash that you're holding from day to day has nothing to do with acquiring a brand new car. It has nothing to do with acquiring a brand new house. Your deed to your house and the title to your car has nothing to do with the cash that's in the loan. If the stock market dips and they sell off all your assets, you still own the house and you own the car. And the loan is paid off. Either way, it is a win-win because when you separate your assets from the debt, if you have to liquidate the debt, you don't lose the assets. But when your assets are securities against the debt, if you can't afford the debt, you lose your assets. You lose your car because you can't pay the car note. You lose your house because you can't pay the mortgage. So the calendar is the result of hundreds of hours of research because I've been looking through this stuff since what, February of this year when we really started getting into this. Actually, technically, I started talking to y'all about this. I want to say September of last year because I really started telling y'all that there's ways that we can make money and not have to live like we live in. And then when Trump got into office, I was like, hell, he gonna change so much shit. Everything gonna go to shit, and then it's gonna get better. And while things are going to shit, now we can get in there as broke folks and get money in places that we couldn't afford to get into because the stock market then went to shit because of people like the gentleman earlier that ran into the podcast and said, sell everything, sell everything. He said, not big into Maine. I'm not big into Maine neither, but I have to be honest with you people. I'm not going to tell you only get a limited number of stocks. I'm going to tell you which ones are good, which ones are not good, but I'm going to tell you that they're dividend payers that can work. But if Maine is not going across the bottom of the screen, Maine is not part of my core satellite. So the ones that are across the bottom of my screen, I stake my life and reputation on. Those are the ones that I believe that between the rises and falls of the growth stocks and between the rises and dividend payouts of the cash stocks, you will be successful. And based on the ones that are going across the bottom of the screen for 16 by 9 and going across the top of the screen for 9 by 16, if you get the cheapest valued stocks with the highest paying dividends, get about 15 of them, put them together, you will build yourself success. And you can generate enough dividends to buy the more expensive ones. Because note, Johnson and Johnson is in there. Exxon Mobil is in there. Shell is in there. Chevron is in there. Pepsi Cola is in there. The good ones are in there. But at $200 a share, Tesla's in there. $200, $300, $400 a share, I kind of want to get $400 worth of dividends from my investment, from my principal, and then go buy me a couple shares of some growth stock. I would prefer to buy Tesla stock because I got $400 worth of PSEC dividends and took that and went and bought Tesla stock. And now I've got Tesla stock and PSEC dividends off of the same value that I put up for the PSEC. That's what I think would be better for me. But that's what it would be better for me. That might not be better for you. So, you know, curate each one of them. I strongly recommend that you look into each one of them and see which ones best fit you. If you want this kind of strategic edge delivered to you, I encourage you guys to subscribe to the channel on a regular basis because every month, every week, every day, the people who subscribe to the channel get updated dividend capture calendars. We talk about this stuff on a regular basis. If you're in the membership, I put stuff into the membership exclusively for the members that I don't put out here for everybody else. That gives you guys more information that's not just on the show. But I encourage you just to subscribe to the channel for free. I encourage you to look at some of the other videos for free outside of the commercials that hit and take a look at all of the strategies that I have pieced together for you guys over the past year that will help you enhance and improve your abilities to make, save, and invest money. Then you want to take the time, you want to share some of the stuff with people that you know, people that invest, people that uh, 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 think that they know how to trade, and compare knowledge. If somebody thinks that they got a little bit more than what I got, they can come in and they can correct me. But this is the best way to get these buys before dates sent right to you. Just come to the show. You know what I mean? We got a link to the membership if you guys want to get into it, but it takes 10 seconds to subscribe, even less than that, to hit the notification button. And I make sure that you guys are ready for the next wave of dividends because at the end of every month, I give you guys dividend information for the upcoming month. And every week, I give you guys dividend information for the upcoming trades to remind you guys on the ones that I'm trading off of my core satellite platform. And then you guys can tell me about the ones that y'all think are good too. Now, as we head into 2026, the market will keep changing because we're expecting to see another crash in January. And having a data driven plan is more important than ever. So, you want to remember to do your own research and manage your risk and trade with discipline. Don't run on fear based on a gentleman that dove in here and swore to God that buying Bitcoin is safer and then switched out and started saying buying gold and silver. We will be back every week with calendars and actually in December we're going to be giving you the January February calendar and in January we're going to be giving you the February and March calendar. Until then you guys got to make sure that you guys trade smart. Now, before we walk out of the show, I want to start off by saying, ladies, as long as the situation doesn't make sense, I'm going to keep asking you, ladies, to make it make sense. So, ladies, please make it make sense. And fellas, I provide y'all this information to help y'all become higher value men so that y'all can not only improve your financial life, but also improve your personal life by making more sound decisions that don't negatively impact your capital, by fixing the things that you can control in your life. You can have a happier, more sustainable life and potentially a better retirement. And then navigate around the things that you cannot control. So work on the things that you can control, change and improve the things that you can control, and then navigate around the things that you cannot. Ladies, while this is a male driven podcast from the male's perspective, we do not only give the information to the men. Ladies, y'all can take this information and make yourselves high value women as well. And then if you are also making changes in your life to improve yourselves and improve your life, you can find yourself a partner that has the same mentality, have the same mindsets, even if y'all have different interests. And then y'all can plan to grow together. That way you have a true partner, not a subordinate, not a servant, not a boss that's bullying you around or anything to that effect. A equal partner with equal knowledge that has the capability to put in insight on things that you didn't see, that you didn't think about, where you can do the same thing and talk to your partner about things that they didn't see, that they didn't think about. The goal is, because I've told you guys plenty of times before we walk out of the show, is that two people with a $50,000 a year income can live a $45,000 a year lifestyle for 10 years and make themselves a millionaire. Two people each with a $50,000 a year income. So there's no reason why any two people that are making 55, 65,000, 70,000 a year dating somebody else that's making another $60,000 a year is not capable of living a reasonably appropriate lifestyle and then taking the other 40% of the money that you don't need and putting it into a stock option and trading it up to make a larger quantity of a third, fourth, or fifth income, which could benefit you because that could encourage you guys to go from working two jobs per person to working one job per person and spend more time with each other. You guys can build up enough wealth where y'all can quit all of your jobs and then spend more time with each other. You're not getting into relationships so that you can have a financial partner that can help you go half on the bills. That's a roommate. You're building a future so that you can spend the rest of your life making memories with the people that make you happy. But in order for you to do that, you have to find better ways to put your money in places where your money makes money for you instead of your presence making money for you, which requires you to show up to get paid. You need to get paid in your sleep. You need to be paid while you're eating breakfast. You need to get paid while you're in the bathroom taking a dump. That's the kind of life that you need. You need to be in the middle of a yacht in the middle of nowhere with no cell reception, getting paid while you're golfing on a yacht. But you can't do that if you don't start looking for alternative ways. Here on This and That, where we talk about this, that, and everything in between, we make sure that we give you guys other ways to do things. So tomorrow's Wednesday. Tomorrow we're going to be talking about different countries that we're going to invest in, and we're going to be doing some deep dives on investment opportunities, as well as talking about some of the living situations that are more affordable than some of the places that we go to, like America. I love this country, freest place in the world to disrespect yourself and disrespect other people, but I also know that there are cheaper places to be. So places like, for example, Japan, $8,500 for the entire year, standard living, all inclusive. Most people know that their standard living in California is $8,500 for the month. So you could get 12 months of living with a California salary. You could get 12 years of Japan living for California's annual salary. And if you think about that, that means that you could have 12 times more profitable lifestyle by taking your California salary, digital nomad, and live in Japan for 12 years. You could find yourself do the same thing in the Philippines, Bangladesh. Special shout out to Bangladesh. What was it? Kazakhstan, Belarus. There was a bunch of places that I was telling you guys that you could just go places and not only do it big, you can invest big. $250,000 in some of these places to get your citizenship and a shit ton of money that is tax exempt for 1 to 2 decades or completely tax exempt because some of the countries that I cover are tax exempt on all capital gains. So hanging out with this show on a weekly basis, daily basis, taking time out of your night to sit with us and learn something instead of getting out there fucking up your life and throwing away money. Think about all the money you spent before you got on this show and then think about how much money you could have made had you gotten here first. Damn. One more thing I'm going to leave you guys with. The shit that you were doing in 24 that you should have stopped in 25 because it wasn't working, you need to reanalyze your situation because you're coming on December. I'm not asking you to make New Year's resolutions. I'm asking you to look back at the last 12 months and realize that the shit that wasn't working in 25, you need to cut that bullshit out and start finding better ways to do things for 26. Your new year should be better than your last year. 25 should have been better than 24, and 26 should be better than 25. You are supposed to be working towards growth and improvement. You are not trying to live on stagnation. Whether you got to change out your friends, change out your family, change out your network, change jobs, whatever change you got to make to find improvement, you need to find improvement. Change your spending habits. But don't continue living the same life that you lived last year and the year before. Don't continue living the same life that you live today. Now, I'm not telling you get out there and go waste a bunch of money and live a life of rally. I'm telling you to be more responsible. Find a way to start your 20-year plan. Where do you want to be at in 20 years? I don't care if you're 40 right now. I don't care if you're 60. I don't care if you're 20. Where do you want to be at in 20 years? If you're still alive, where do you want to be at? And start making the decisions today to make sure that you get there before that 20-year mark. That is my challenge for you for tonight. Now, I want to thank you guys for coming to This and That. I appreciate all the people who came onto the show to provide their wisdom. I'm your host, Xander, where we talk about this, that, and everything in between. And I'll see you guys tomorrow night.
Higher ground. Used to chase validation, now I validate myself. Building inner strength, putting doubt upon the shelf. No more unnecessary drama, no more wasted time. Climbing higher, constantly making my own climb. Standing on higher ground where excellence is found. My potential knows no bounds. Raising the bar, breaking ground. My network is my net worth. Choose your company wise. Surround yourself with eagles, not with sheep in disguise. Every interaction is a reflection of my brand. Quality over quantity, that's my personal command. I'm not landing on higher ground where excellence is found. My potential knows no bounds. Raising the bar, breaking ground. I'm not just living, I'm manifesting my vision, cutting through limitations with surgical precision. My expectations are my compass, my respect is my shield to mediocrity and chaos. I will never I'm not just living, I'm manifesting my vision, cutting through limitations with surgical precision. My expectations are my compass, my respect is my shield to mediocrity and chaos. I will never yield.